Hello, welcome to ATILC Business School, a professional training institution that provides both ICANN and ACCA tuitions to students taking the professional exams. At ATILC, we have conducive learning environments, qualified tutors that can help you pass your exams. We have tutors with years of training experience, and our tutors can guarantee you a pass in subject matter areas. Why not join us today and let's be part of your success story. ATILC, your mentor for life.
That we have quite a lot of number where I think we are about over 30 now, which is good. We're still expecting a lot of people. So just as you got the timetable and the schedule, my mandate today is very clear. Okay, I am supposed to talk about the Nigerian Tax Administration Bill. That is my mandate. I'm supposed to talk about the Nigerian Tax Administration Bill as well as the Joint Tax Board. Okay, so unfortunately, I will not be able to talk successfully about the Nigerian Tax Administration Bill without talking about the Nigerian Tax Bill. Okay, so I will dive, you will see me diving into the Nigerian Tax Bill. Anytime I dive, I will let you know. Okay, the second constraint I'm going to have is that I cannot teach the whole of the bill in 2 days. That is just the truth. The Nigerian Tax Administration Bill has 144 sections. 144 sections, active sections, and 5 chapters. It has 144 sections and 5 chapters. If you give me 2 days, I can't teach it. That's just the truth. So what have I done? My methodology is to highlight areas in the bill that differ from what we already know. That is what I have done. I highlighted areas in the bills that differ from what we already know. For instance, we know that Section 55 of the Company Income Tax Act requires us to file a return on 6 months after the year end of a on or before 6 months after the year end. So I'm not going to teach that. The only thing I'm going to mention there that it is no longer Section 55, is Section 11. You understand? And I will bring out what has changed. The good thing about Section 55 is that the only thing that has changed is in the penalty. So we would just highlight all those things, okay? Then because I'm the first speaker, with the approval of ATILC, I'm going to give a general overview. In the next 2-3 minutes, I'll just give a general overview of what you're expected to know. So let me just kick off, okay? My name is Philip Bader. You know me already. I'm one of your tutors at ATILC, okay? I'm a chartered, I'm certified to practice tax in Nigeria, okay, by the Chartered Institute of Taxation. I have other qualifications, but like I usually do, I always bring out the qualification that I feel is relevant to our conversation, okay? If you want to know my other qualifications, follow me on LinkedIn, okay? Good. So this is this thing. So there was a presidential committee over a year ago. There was a presidential committee and set up by the president, okay? And the mandate of that committee was to establish a conducive policy environment to attract business and position Nigeria as Africa's hub for business. What does this simply mean? What it simply meant was that we needed to change the way we do things. The way we do things had stopped attracting investment. That was just the truth. Nigeria had one of the oldest tax systems in the world. Okay, we had tax laws that are as old as 1938. Okay, our Stamp Duty Act is as old as 1938. The last time we did any major reform in any tax law in Nigeria was 2004. Okay, that was the last time we did any major reform. Every other interventions you have seen are minor reforms. Okay, there are at least another 60 tax bills that were sitting in front of the National Assembly that will never have been passed. Okay, the current tax laws were extremely unfriendly to business operations because we were taxing capital rather than taxing profit or gains. Okay, And that is not a way to grow the economy. So the beautiful thing about that committee was that it was led by a renowned expert. Taiwo Oyedele is a home. Everybody knows Taiwo Oyedele. I'm not here to praise him, but there is someone that I respect so much. Someone that is the first Black African to be on the ACCA board. I don't think that is Binks. He was a partner in tax in PwC, and he demonstrated credibility by resigning from his position as a partner in PwC to take this job. The unique thing about that committee was that they had a mandate to propose and implement. We have never seen that in a long time in Nigeria, where a committee would propose and implement. And in fact, I feel that is how committees in Nigeria should be. We should not have a committee that will propose, then a committee that will review the proposal, then a committee that will review the review of the proposal, then we'll have a committee that implements. It waters down the whole effect. So that committee had a mandate to propose and implement. What was the desired outcome of that committee? So we had fiscal governance. I think it's in one of my slides. I can't find it. Fiscal governance. Okay, yes, it's there. Growth facilitation and tax reforms. Okay, fiscal governance, growth facilitation, and tax reforms. Now, it was natural for them to tackle on tax reform first, because that is a government that doesn't have money cannot run. Period. Government needs money to run. A government that doesn't have money cannot run. So they tackled tax reform first, but I want to tell this house that tax reforms is just 20% of the entire activity. I'm telling you, there is so much more work to be done, or so much more work that is being done. Their work could also translate into even amending the Constitution of Nigeria. That's just the truth. So here, we are here to talk about tax reforms. I just want you to know that this is it. The desired outcome was to have a robust, inclusive, and progressive tax system, removing investment impediments. And what was our major investment for impediment? Taxing capital rather than taxing profit. For instance, why are you charging minimum tax on a company that declared loss? It doesn't make sense. You understand what I'm trying to say? What you don't, it doesn't make any sense at all. Any addition on, so the objective is just to tax profit and tax gains. If you don't make a gain, you exempt yourself from that. So that was the objective. The second objective, which is very, very interesting and which I want us to follow, is to give succor for businesses to grow. Objectives, in my opinion. Give succor, give them opportunity to grow. Do you notice that if you open shop, the first people that will knock on your door is AMAC? They will come and give you all sorts of taxes and levies. You will begin to pay levies from your capital. It doesn't make sense. So the committee has come to see how we can eliminate this. And honestly speaking, I will share my opinion on this and what it is doing. Now, there are two major things that we need to do. What we know. What do we know? We know that Nigeria has a revenue crisis. Okay? At a point in 2023, our debt servicing ratio was 73%. Okay? In our proposed budget, the proposed budget as we have it now, it's about 46 trillion. Okay? Our revenue is just about 35 trillion. You will agree with me. What it means is that the balance must be financed by debt. Okay? If you look at debt servicing as a ratio of the budget, it can be as high as 76%, depending on how you play that figure. Okay? I may put it in the worst case scenario, 76% of money that will be generating, which is about 35 trillion, which we are not so sure of, will be used to service debt. So the truth of the matter is that Nigeria has a revenue crisis. Whether you like it or not, Nigeria has a revenue crisis. And a debt, a very stupid debt called ways and means. I call it very stupid, and forgive my French. We're all professionals here, so you tolerate me. Okay? Why do I call it a stupid debt? It's a debt that arises because a government decides to print money rather than engage in economic activity. You ask your central bank to borrow you money to spend. How do you think the central bank will get the money from? The easiest way is to print it. So let's call it what it is. the CBN has printed money, not backed by any economic activity, to the tune of 23 trillion naira. That money must be paid. It's called waste and means debt. Okay, that money we must pay, ladies and gentlemen. Okay, so thank God the CBN told us that they have made substantial payments. I know that last quarter we paid about 4.6 trillion of that debt, so which is a good thing. I need to give us this background so that we can appreciate the bill better. Okay, there's another thing I didn't want to put here because it has not been publicly verified, and that is called crude oil for cash. Crude oil for cash swap. Okay, there are a lot of debates there. I did not get the official position, so I did not put it on the slide. But what does that say? We know for a fact that in 2022 we borrowed 1.5 billion dollars, for which we will pay with crude oil. Okay, that one was made public. You can Google it; it's there. And in 2023 we borrowed another 1.4 billion US dollars, which we will pay. The first one was from China's Nexim Bank. The second one was from African Development Bank, 1.4 trillion, which billion US dollars, which we must pay in crude oil. You know the implication? The implication is that any oil you drill now, you pay. You usually need to pay debts. In fact, in the first agreement, it was agreed that 30% of the oil that you drill will be used to service that debt. And the debt was not interest-free. It was at a very high interest rate, okay? So Nigeria has a revenue crisis that has been established. The second problem which is obvious is the fact that we have a current tax system that is not working. Our current tax system is not working. Our tax to GDP ratio is one of the lowest in the world. It was at a point it was 6%. I think now it has grown to 10%. It's one, you know, I mean, well, I'm speaking to professionals, so I just want to assume that we know what GDP is and we know what tax is. The amount of money we collect, our tax base, in comparison to our GDP, national income, is as low as 6%. Greater estimate 10%, lower estimate 6%. That is a crisis. Okay, we have too many taxes, over 60 official tax laws, over 200 unofficial taxes. Okay, no business can grow like that. Okay, and you know the painful thing, it is the poorest of the poor that we have been taxed. The elites are not being taxed. The rich are not being taxed. Of course, they are rich. They can employ all the consultants they need to make sure that they evade tax. The poor people cannot. How many of you have driven on the streets of Abuja before where some armed boys will just run around you and collect money from you? Do you know it's tax you are paying? Do you know when you pay for driver's license is tax? The government is taxing you to drive. Why are you paying money for it? Why? Why are you paying money to collect driver's license? You said, I know that I can drive. You are the one that wants to license me to drive. Yet, you asked me to pay to license me to drive. But I didn't tell you that I cannot drive. In fact, record shows that the driving school that you said I should go, I went. So why am I paying? And guess what? You pay that money every other year to drive. They say 3 years. Okay. Typically, in Nigeria, a Nigerian business pays income tax at 30%, education tax at 3%,
3.3%,
5%, neither tax at 1%, and the remaining tax money you have, when you pay your shareholders, you have to deduct another 10% as withholding tax on dividend. So our effective tax rate generally is over 40%. There is no country in the world that has that ridiculous effective tax rate. Okay, and all over the world, and especially what our national tax policy is saying, that we should shift taxation from income to consumption. When people make money, don't tax them when they consume. And you know that Nigerians are very good at consumption. You understand? So you see somebody, a socialite, very dark man, for instance, you know, imports a car worth 160 million. When you ask to see his tax card, he has declared only 20 million as income. So where did the 140 million come to import that car? So we know in Nigeria that we are better at taxing income than consumption. So what do? We hide our income and we display our consumption.
Expenses.
This tax regime is going to create that paradigm. And they are going to use data to do that. We won't even care about they won't care what you pay. You care about what you spend. Okay, and based on that, you will be taxed. So this is our challenge. So now we know that. So the question I want to ask you guys is, if the tax system as it is now is so bad, and this tax reforms is supposed to correct this very bad tax system, why is there so much resistance to the tax reform? This is a rhetorical question. I'm not going to answer it on this call. However, if you are my student and you chat with me, I will give you my opinion on that. Okay? Now, where are we so far? We know that there are 4 bills that have been sent to the National Assembly. You have the Nigerian tax bill, which is a harmonization bill. It has over 200 pages, okay? It is harmonizing every other tax. So the company income tax, the capital gains tax, the value added tax, the petroleum profit tax, the PIA, the stamp duty would fall under just one bill. It is going to be the Nigerian tax bill. So if you are an investor, that is the bill you want to look at, okay? Because you want to see what will be taxed and how it will be taxed, okay? Now, then there's a tax administration bill. And ladies and gentlemen, this is what my section would address. The tax administration bill is an administration bill. So what does it do? It tells you how you will be taxed, okay? Who will tax you? When you will be taxed, and the penalties you would face if you don't subject yourself to tax. Okay, so that bill addresses we'll look at it since I'll be discussing it. Then we have the Revenue Service Establishment Bill. So what is happening here? It is a bill to strengthen the scope and the role and the function of the Federal Inland Revenue as we have it. Okay, it is so instead of the Federal Inland Revenue to be a federal government agency, it will be an agency for the federation. Okay, it will be a federation agency responsible for the taxation and the collection of all taxes, okay, for the federation. And if you want to look at it, that's how they actually perform that role, because any money they collect is shared by the federation. Okay, now that will not remove the fiscal federalism that exists presently. There will still be a state internal revenue service, and there will still be a local government tax committee. Is that okay? But the way it is, there will be better collaboration between these agencies, and that is why we have the Joint Revenue Board bill. Okay, the Joint Revenue Board. You will notice that before now, the Joint Revenue Board was just a provision of the Personal Income Tax Act. I think Section 82 or so. I'm not very sure. Okay, but now they have a bill that makes it a joint revenue indeed, and have other functions. For instance, the Tax Appeal Tribunal, which used to be in the Federal Inland Revenue Service Establishment Act, will now be in the Joint Revenue Bill to actually make it a federation thing. And there is a particular one that was created in the office of the Ombudsman. Sorry, I struggle to pronounce it very well, so we'll just forgive my mother tongue interference. We'll talk about it very soon. So let's go to the Nigerian Tax Administration Bill, which is what this section is all about. Okay, this is where this. So before I go, I want to let you know that the Senate has passed these bills at second reading. So what it means is that it goes to the committee
President.
The third and final reading, then the president will assent to it, and they stop being a bill and becoming an act. However, the House of Rep must also pass it. I cannot tell categorically, and with all my research, I could not tell if the House of Rep has passed it at the stage of the second reading. I cannot tell. Okay. However, let us just know that it has passed the second reading at the Senate part. So it is. We have not reached. This is not where we intended to be with respect to the reform, but it is better to be moving than not to move at all. Okay. So now, so what is the Nigerian Tax Administration Bill all about? Like I said, my approach will be to just isolate what has changed. Okay, I cannot do everything. So the objective is to facilitate tax compliance and optimize revenue. Now, what does that even mean? So the title of the bill is a bill for an act to provide for the assessment, collection of, and accounting of revenue accruing to for the federation, federal, state, and local government, prescribe the powers and functions of the tax authority, and for related matter. That is the title of the bill. The objective of the bill is to provide uniform procedure for a consistent and efficient administration of tax laws in order to facilitate tax compliance by taxpayers and optimize tax revenue. Now, let me just give a summary of what this means. The bill, the tax administration bill, wants to encourage voluntary compliance and punish non-voluntary compliance. So if you comply, you get a lot of waivers and reliefs. If you don't comply, you pay a lot of money for non-compliance. That is just simply what it means, okay? So this bill will apply to everybody that is required to pay tax, both physical persons, natural persons, and artificial persons. So you will not have a situation where the Value Added Tax Act gives a separate penalty and the Income Tax Act gives a separate penalty. The penalty will be for non-compliance to the tax law. So when you not comply to VAT, the same penalty. If you don't comply to income tax, the same penalty. I don't know whether you understand what I'm trying to say. It makes it easier to understand, okay? It makes it better and more applicable. So it also gives a lot of room for collaboration. If you go through the bill, you will discover that powers have been given for a lot of collaboration between tax authorities. For instance, like I flagged this one, tax authority can authorize another tax authority to administer taxes on his behalf. So a tax authority feel that they are deficient, where a state internal revenue service is not happy with their own performance, they can say, Federal Inland Revenue, you have competence there, can you help us do it? That's what we will begin to. Okay, so I think that is clear. Okay. Okay, I will need some more. But it's okay, I will do my best. Okay, so what are the general interpretations we will see? We will see definitions for digital assets. Okay, just take it as what you see it. Okay, our minimum effective tax rate now, remember at the beginning of the class I said it's 40%. I mean, it will go down to 15%. That is the objective of the bill. The bill will bring it down to 40%. Then we have a new definition of small companies. A small company now is no longer one with turnover of 25 million. One with turnover of 50 million with a fixed asset of less than 250 million. But there's a caveat which I talk about. And the caveat is that if you provide professional service, you will not be considered a small company. Okay, like ATILC will never be considered a small company. Okay, because we provide professional service. I can tell you the rationale, but I don't have the time. Okay, but I can. Don't worry. I know the rationale to it. The truth of the matter is that we want to encourage physical production. Okay, we want to encourage physical production, and no country can grow where physical production is absent. The challenges that UK is having today is because they have eliminated their physical production. That is just the truth. Then there's a definition of character. Public character now means what the law says public character is. What it means is that you have to be registered as a trustee company, okay, and you cannot be distributing product. Then there's going to be what they call priority company. I don't know if you remember what did they call it? Pioneer. Pioneer will no longer run as Pioneer. Okay, now you have to go through the text to show that you are a priority company. A priority company is one that has significant economic benefit that is traceable. Okay, they will give you a certificate for it, and for that you will enjoy some tax exemption. Capital allowance will no longer be 10 naira being retained on the books. It will be 1%. Okay, you know, I told you I'll tell you what the changes are. Okay, it will be 1% now of the value of the asset that will be retained in the book. Now, registration requirements. Now, this is very important. Team registration is very, very important, okay? And you need your team for every contract negotiation, even if we're negotiating one with another, okay? So I want to negotiate with Usman now. The first thing I should ask him is, do you have a team? Yes. Do I have a team? If we don't, we should not negotiate. That is what the law is saying. And when we go to penalties, you will see that any statutory body that gives contract to any individual that does not have tax registration will be subject to a penalty of 5 million. Any contract you give to a person that doesn't have a team will suffer 5 million as penalty. Okay, so anytime you change your address, you change your information, your email, anything, phone number, you have 30 days to inform the relevant tax authority. Okay, and you will need your team to even open a bank account. Okay, so that is what this slide is saying. Okay, then what this slide is saying is that generally there is a requirement to file annual returns. Nothing has changed. What has changed is that if you are in the mining sector, if you are in the petroleum sector, you are in oil and gas, you are a non-resident company in aviation or shipping, you will be required to provide monthly returns. They are going to be called estimated returns. So that we need to know that. If you are in oil and gas, especially gas, okay, you will be required to provide monthly returns. Now, if you are a small company, the fact that you are exempted from taxes does not mean that you are going to be exempted from filing. However, the annual you file need not to be audited. Okay? If you audit it, it gives you credibility, but you need not to audit it. Then the Act provides for what they call VAT fiscalization. I know Hafiz and Idris is going to address this very well, so I will not talk so much about it. However, I need to talk about the fact that financial institutions, by law, will be required to provide your bank information to the relevant tax authority. Everything. Okay? So you need to know that thing you are hiding, they will see it anyways. Okay? Then, when it comes to assessment, self-assessment can be done electronically now. Okay? Which, if it is fast, you can do it. Well, some organizations are already doing it. Now, let me tell you what self-assessment means. To the extent that tax receipts will be issued electronically, and you will not be required to pay any form of tax, whether by levy or anything, physically, by cash. You must pay through an electronic means. So what it means is that if this act is passed, those boys that will stop you on the road and give you ticket, you don't have to pay. Unless the bank account, which you will see there is a government bank account. To give you an idea, it may just be remitter. I don't know. You understand what I'm saying? But to give you an idea, that's what it will mean. In fact, what they are trying to do is that if you pay up to 9 taxes in Nigeria, you don't have to pay the 10th one. You can choose not to. As a company, yes, you can choose not to pay them. Okay? So, but however, if you don't file, the tax authority will be forced to send you an administrative assessment. Okay? Now, whether you file or not, you will still be subject to additional assessment. Okay? And you can object. That one you know. But what is key is that if you object a tax assessment, relevant tax authority does not respond after 90 days. Your objection stands. They cannot come after the 91st day to say they are responding to your previous assessment and give you an oral, the notice of refusal to. Yes, you know that our tax administration, with respect to them, they are not very efficient. You object, they can keep it for 1 year. After 1 year, they will now respond to you and they say they are objecting to your objection. No, what it is, that is clear. That is going to be in the act now. Okay, I'm rounding up. Okay, I'm rounding up. They are looking at me already. So there's a general and administrative tax or provision which has formally established the state revenue services. Okay, now there's a formal establishment. Before, it was in Personal Income Tax Act. Now it is in the Tax Administration Act. Okay, they have also now, in the previous FRS Act, they say the service may deploy proprietary software. In this act, this must provide electronic platform for taxes. It is not mandated for all tax matters. And you know what technology does, Abi. It makes it what do you call automated, no human intervention, and makes it transparent. Where I don't need to negotiate with me as a tax authority. Will there be any uncertainty in taxes? No. This uncertainty in taxes comes because you need to talk to somebody. Okay. Now that does not remove the need and the mandate to negotiate. Okay, it is still there, but everything will end up in technology. So one man on it, how many of you have entered the market before and the man doesn't have change and he'll tell you to bring half the price? You know, when you drive into the market, you're supposed to pay for parking. Abi? So when you don't have change, you'll say, if you're supposed to pay 100 naira, you say bring 50 naira. He won't give you tickets. Abi? Those things will stop. And you know how they have made it. In any local government or state institution, when you pass and they force you to collect their tickets and give them cash as pay. As soon as you get home, there will be a platform where you can upload those receipts. As soon as you upload the receipts, okay, in the next allocation sharing, they will deduct it from that local government and credit you directly. Trigger something else. Why they are still investigation into why they are still manually collecting tax. Okay, this is my personal opinion. If you put me, I would say I didn't say it. I think that's why a lot of state governments are resisting the tax. Because a lot of taxes have been collected manually in the past, and accountability has been a problem. Okay, but let's continue. So there's going to be advanced ruling. Advanced ruling simply means that tax authority can give a ruling, okay, so that you don't even need to go to tax abuse tribunal to get a ruling. You are having an issue, you can write to the tax office to give you a ruling, okay. Another thing is VAT distribution formula has been introduced. It will be talked about, so I don't want to overflow it, especially since I don't have. Now, offenses and penalties. I was preparing an Excel sheet to summarize all the offenses and penalties. All the offenses and penalties in all the tax laws have been put in one tax law now as one document. There are about 40 of them. Unfortunately, when I was trying to save, they took lives. So if you registered for this program, it is with your permission, I will send the Excel sheet. I have extracted it. I've done all the work for you, okay? But let's discuss a few of them. If you refuse to register for tax now, the penalty is 50,000. In the month you discovered that you refuse to register, and for every time you continue to refuse to register for tax, the penalty is 25,000. So 50,000 in the month we discover that you refuse to register, and subsequent months 25,000. Okay. If you are a statutory body like ATILC and you give a contract to somebody that is unregistered, the penalty is 5 million. So ATILC, we do a lot of contract work, right? By the nature of our work, we give a little contract. Catering, we give catering contracts, we give even our lecturers are on contract. We give them contract letters. If our lecturers don't have team, or they cannot demonstrate that they have registered, and we give them a letter, Oga MD, I'm warning you now. And it was discovered that they don't have a team, and the tax authority comes here, the surcharge is 5 million. Okay, of course, I don't need to tell you what that will do. What that will do is that the only people that can do business in Nigeria are people that are registered to tax, okay? And don't forget, small businesses are exempted from paying taxes, so why would you not register anyway? Okay. Now, failure to file return, any return now, the penalty is 100,000, would be 100,000, sorry, would be, because it's still a bill, 100,000 in the month that you failed and 50,000 subsequently. So if by June you're supposed to file your income tax returns and you fail, 100,000 in the month, okay, and 50,000 in subsequent months. There are about 40 of them, okay. I will share that slide. It's an interesting slide. And let me make this point, ladies and gentlemen. If you're on this call, it means that you're a professional, okay? If you're in this call, you mean you're a professional. Ladies and gentlemen, to become an effective professional, the offenses and penalties is what you should learn first. Because when you are giving consultation, you must be able to tell the tax person the consequences of non-compliance. Okay, so that he doesn't think you just want him to pay you money for doing nothing. They should know that there is a consequence of non-compliance, and it is as high as this. Okay, now let's go to the next slide, which is other. Okay, this is a repeated slide. I apologize. Okay, now let's talk about the Joint Revenue Board. This is a very short slide. The Joint Revenue Board is, we already know it used to be the Joint Tax Board. Okay, it was like an association. Now it is going to be made a full agency. Okay, it is going to be made a full agency with functions and rights. Okay, with functions and rights. Okay, so what would be part of the functions of the Joint Tax Board? They will now be responsible for integrating things. Okay, so that if you live in Lagos and you have to move to Kaduna, you don't need to change your team. Okay, you just continue to file your taxes. So they have the responsibility to integrate things. They have the responsibility to advise federal and state government on the introduction of new taxes. They have the responsibility to advise government on double taxation and capital allowance issues. This one you already know. They are going to maintain platform for revenue, data collection, integration, and exchange of information among the various tax authorities in Nigeria. And they will have the responsibility to recommend, participate, facilitate, or initiate fiscal and tax policy reforms in collaboration with other relevant tax authorities. Okay, who are going to be members of this board? You have the headmaster, that's the executive chairman of the Revenue Service, as the chairman. All states, chairman of State Board of Revenues, representative from the Attorney General, representative from the Finance, representative from the Road Safety, representative from Fiscal Revenue Mobilization, Fiscal Allocation Committee, and National Planning. Those are the members of the board of the Joint Tax Board. Okay, every other thing, as you know them, remain the same. Okay, good. Then the next issue is the Tax Appeal Tribunal. I told you that the Tax Appeal Tribunal has been moved from the FIRS Establishment Act to the Joint Revenue Board now, okay, to make it a revenue, a federation rather than a federal issue. So the only thing that will change there is that there's going to be a coordinating secretary that will coordinate all. You know, we have 8 tax appeal tribunals. I hope you all know that. In case you don't know, you know it now, okay? Now, there should be one secretary. All the 8 tax tribunals are coordinated by individual secretary. There should be one coordinating secretary. So what will be the person's role? To coordinate every ruling that other tax appeal tribunals are giving and make sure that there is no conflict of interest in either the cases or in persons. Okay, that will be a role. Every other thing remains the same. For instance, their appointment will be by the Minister of Finance. It is an arbitration forum. It is not a court. Okay, that will remain. The locations where they can be, everything is remaining the same. So nothing is changing there. Okay, now this is what is very, very new in the Act, which is the Office of the Tax Ombudsman. Okay, the Office of the Tax Ombudsman. Okay, so what is it? He is an arbiter. For instance, ATILC is a small company. Usman is a small man. They give you a tax assessment. You are not happy with it, but you don't know whether it's correct or not. Okay, you just go to the ombudsman. He will take it up and represent you. Do you understand? He will, if they were correct. How many of you have ever walked into a tax office before for team and they told you to pay money? It's okay. This is a good time to raise up your hand. Ladies and gentlemen, do you know that you are not supposed to pay for team? Did you know? A lot of people don't know, so they will pay. If such a thing happens to you, it is the ombudsman that you will go and meet. Okay, so what would be his functions? Let me just go through it. He will serve as an independent and impartial arbiter to review and resolve complaints relating to tax, levy, regulatory fee, charges, custom duties, and excise matters. So you see this AMA comes to you, give you a tenement plate. There's one they've been sending. They say it's harmonized bill. There's nothing like that in the law. There's nothing like that in the law. The ombudsman will take it on. Do you understand? He will review complaints against tax officials, okay, and authorities, and resolve it through mediation or conciliation, that's reconciliation, by adopting informal, fair, and cost-effective procedure. He will receive and investigate complaints lodged by taxpayers regarding the actions or decisions of tax authorities. So they give you an assessment you are not happy with, you will go there. An agency give you an assessment, you will go there. You understand? He will enter and inspect any premises or place where the tax authority, he has the power to do that, to enter the tax authority's office and inspect them. Okay? He will invite anybody for this thing. He will make recommendations. He will institute legal proceedings. He will go to court on your behalf. Okay, he will go to court on your behalf. He will provide information and raise awareness. Okay, so you will see one of the ways you will see that they are working is that they are talking about taxes. Okay, because it's not the tax office authority's job to actually tell you about your tax. The ombudsman will take over that from. He will serve as a watchdog. Okay, however, this is what he cannot do. He will do it for free. He cannot charge you for this work. Do you understand? He cannot charge you for this work. He must act in good faith. Okay? He will not have the power to interpret any tax law. Okay? He will just make sure that the right thing is done. And every 30 days, at the end of each quarter, every 30 days, he must publish everything he has done in a gazette. Okay? So do you understand ombudsman now? Because it is not in any tax law before. Okay, this is a new innovation. Okay, I'm sure we'll take the conversation further. Ladies and gentlemen, this is where I would like to stop. I must tell you that there are so many things I have not said, but because of time constraint, I must find a way to stop. So let me recap. Okay, let me do a little recap. Number one, there are going to be 4 bills only instead of the 13, 16, 60 bills. 120 tax laws. There are going to be only 4 bills. The first one is going to be the Nigerian tax bill. The second one is going to be the Nigerian tax administration bill. The tax bill, you go there to see what taxes you should pay and the rate you should pay. The tax administration bill, you go there to see who will collect my taxes, how they will collect my taxes, what penalties I will suffer if I don't pay those taxes, and the general coordination, offenses, etc. That is what you see. The revenue tax bill is a repealing bill. It's repealing the FRS and establishing the Nigerian Revenue Service to expand its scope and really make it an agency for the federation. Okay, not what has changed in the revenue bill. What has really changed is that, you know, in the FRS bill, they institutionalize the board. Okay. In this new bill, they did not only institutionalize the board, they institutionalized the management. Okay, so the managers too are in the act now. Okay, it's in the bill now. The number of coordinating directors they can have, their functions, everything has been spelled out in the revenue establishment. Then we have the joint revenue bill that is going to replace the joint tax board. That joint revenue bill is coming to expand the scope of the revenue board, provide the office of the tax appeal tribunal, and provide the office of the ombuds. I'm always, you know what I'm trying to say, ladies and gentlemen. Okay, the ombudsman. Okay, now the Nigerian Tax Administrative Bill, which I was asked to review, I have given us very, very good highlights. Registration has become very, very key. To the extent that you are not registered, you should not do business. Do you understand? In Nigeria, registration has become very, very key. The tax offenses have been centralized. Okay, they have been improved. Okay, I'm hoping that in our next webinar we will look at the Nigerian Tax Act so that we will mirror the taxes one after the other. But ladies and gentlemen, I'm happy to say that we are going to talk about VAT today. I know anyhow. We will talk about pay today. I know anyhow. Okay, so. But that is what the Nigerian Tax Administration Bill has come to do. They have come to harmonize all the tax position, the administration, the introduction of technology, the simplicity in taxes, the exemptions that you should enjoy, okay, the penalties for non-compliance, okay, the reclassification of taxpayers into small taxpayers and other taxpayers. Okay, if you look at the Tax Act, you will notice that the income tax has been brought down to 27%. Okay, they have removed NIDA, they have removed NASENI, they have removed Police Trust Fund, those small taxes that will frustrate you, and they have replaced it with only one tax development tax. It's called a development levy, and it is at 4%. That will drop to 2%, and that will drop to 0 in the next 10 years. Okay, it will drop to 2% and it will drop to 0 in the next 10 years. In the next 2-3 years, if this bill is passed today, that 27% will go back to 25%. Okay, and your effective tax rate will go down to 15% eventually. You know what effective tax rate means? It's your tax against your income. Okay, as a ratio against your income, that is your effective tax rate. Right now, it is as high as 40%. It should go down to 15%. That is best practice. Your payee, for instance, if they implement that tax today, just check your salary next month. It will go up. It will go up because the highest bracket, which will be 25%, will not kick off until you start earning 50 million per annum. Ladies and gentlemen, how many people in Nigeria earn 50 million? How many people earn 50 million? You understand? I have calculated my own. My salary will go up to as high as 300,000. My own salary. I'm telling you the truth. And you will see it cascade across. So the low income earners would earn more. High income earners will be taxed more. I also told you from the beginning of this class that it is so structured that they will use intelligence to track your consumption, not your income. It is your consumption figure they will be flashing at your face. So you put a tax income report that you earn only 100 million, yet you bought a house. You will not be able to explain that, whether by inheritance or by gift. How did you get the house? You know, you can get, and we don't have inheritance tax in Nigeria. And the new tax bill did not propose an inheritance tax. However, you can inherit a house. I mean, Oga Idris has been telling me how much he likes my work in the last 1 year. He might decide to give me a house, okay? So when the tax man comes, I'll just say, it's Oga Idris that gave me the house. So then they will now go after Oga Idris and say, Oga Idris, you dashed Philip the house. Please, how did you earn the income? Did you pay tax on the income that you used in getting the house? So these are the kind of things that we would like to see. I told you that there's been a lot of pushbacks, okay? So most of the pushbacks have come from lack of understanding, but some has come from mischief, I must tell you. It is beyond the scope of this class to tell you about the mischief, so I will not talk about the mischief, but trust me, I know the mischief, okay? And ladies and gentlemen, I have come to the end of my session. Thank you very much.
Okay, let's put a thumbs up for Mr. Philip for the wonderful explanation he has done in respect to tax administration in Nigeria. Want to see a lot of clapping and a lot of thumbs up there. Yeah, thank you very much for contributing. Yes, we will be continuing with Mr. Hafiz, rather. Mr. Hafiz will be the next presenter, and he would be commenting on. Sorry, just a minute. I wanted to share my screen with you guys as we are talking. We would drop the video of this in our what they call it, in our YouTube page. So for those that probably want a recap, you can go to our YouTube later today, and you will get the full video of this presentation that we are doing. You get a full video of the presentation. Also, you would get the materials, all the relevant materials that are expected to be provided. You'll also be having access to that by the end of today as well. So please make the registration form and you've actually filled what you need to fill on the registration form, so that you can be able to have access to all the materials that we've promised to release by the end of the training today. So we'll be having Mr. Hafiz coming up now, and Mr. Hafiz will be talking about VAT remittance. I don't know why okay, I believe that you should be able to see my screen. All questions. Okay, somebody says unable to fill the form. Please share your emails on the chat platform. Share all your emails if you don't have access to to filling the form online. Please share your email right now so that we can take note of that. For those that have raised their hand, like Mr. Ima, there is going to be time for what do they call it, question and answer. So we are definitely going to take up all questions that are required. Okay, so don't worry about the question. We'll be taking all the questions that are required. So we'll be having Mr. Hafiz coming up. Mr. Hafiz, please, can you indicate your presence?
Hello, good morning. Good morning, everyone.
On your mic.
Hello, good morning.
Hello, good morning, sir.
So that they can
We
see
can
you.
hear you. Good morning.
Yes,
Yes,
good
go
morning.
ahead.
Okay, good morning.
Hello, welcome to ATILC Business School, a professional training institution that provides both ICANN and ACCA tuitions to students taking the professional exams. At ATILC, we have conducive learning environments, qualified tutors that can help you pass your exams. We have tutors with years of training experience, and our tutors can guarantee you a pass in subject matter areas. Why not join us today and let's be part of your success story? ATILC, your mentor for life.
Today, so let's give a warm welcome to Mr. Hafiz by putting our claps and our thumbs up for Mr. Hafiz, everyone.
All right, thank you. Good morning, everybody. Hello, good morning. Hello.
Good morning, sir.
Okay,
Good morning, sir.
Good morning. We can hear you. We can hear you.
Good morning, right on. We can hear you.
Okay, yeah, thank you very much. And thank you for this opportunity for me to speak on remittancy and consumption model. I also like to thank Mr. Phillips too for a good job that was well done. Now I've actually talked a lot about the reform, and I also like to thank the school too as well for trying to bring this kind of initiative for us to educate ourselves about the current happening in Nigeria now. So, like what Mr. Idris have said earlier on, I also support him too as well, that we don't need to bring politics and ethnicity into this discussion. It's more of like an idea sharing section. We just want to share knowledge. Now, if you look at the bill as of today, there's something they call remittance model and consumption model, which I would like to break down for some of us. We all know what value added tax is that is a tax that will pay on consumption of goods or services. On consumption of goods or services. So, however, now when you talk about this, when we talk about this,
Mr. Can you on your camera, please, so that they can know who is speaking, please?
My camera, my video is on.
Okay, we can't see.
My
you,
video
that's
is
why.
on.
Please.
Okay, my video is on. Yes, I'm in the village, so I'm in a very remote area now. In fact, yes.
We would like to appreciate your village environment.
I'm in the village. So now, as I was saying, when we look at the remittance model, what we are trying to say here is that in the layman language is that the place where the VAT is being remitted will be the one that is going to have a claim to it. And that has been the model that has been adopted. For instance, now, if you look as of today, most of the big companies that we have in Nigeria have their headquarters in Lagos and Port Harcourt. For example, like Dangote, MTN. But what the consumption model is now saying is that where the goods and services is being consumed is that region or that location that should claim that VAT. Now, if for instance now Dangote that sells cement, you'll agree with me that we use cement in Kano, we use cement in Abuja, we use cement in Sokoto, we use cement in Kebbi, we use cement in Ekiti, and so on and so forth. If Dangote turnover on cement sales for a year is 100 billion, because Lagos, Dangote headquarters is domiciled in Lagos, Lagos will be the one that will claim that 100 billion, which is not supposed to be so. So the consumption model is now saying that as Dangote is making its sales and they are making record, they should give location of where that consumption is being done. Because definitely they will have distributors across all the 36 states of the world of the federation. So if consumption is done in Sokoto, give us that from the 100 billion sales that you have made, 2 billion was actually being consumed in Sokoto, 5 billion was consumed in Abuja, 10 billion was consumed in Ekiti, 50 billion was consumed in Lagos. Before we now start the sharing, that is where the consumption model is trying to come to effect. That is the proposed model. And we believe that this proposed model of using consumption model is fair enough. Now, the issue now is the percentage. Unlike what we have before in the current VAT regime. The current VAT regime, you know, we have what we call population, we have what we call equity, and we also have what we call derivation. Now, on equity is saying 50%, population is saying 30%, while derivation is now saying 20%. What did that mean by equity? Now, if as of today, what has been contributed into the VAT pool, let's say is about 100 billion. The current regime says that 15% of that amount will go to the government, 50% will go to states, while 35% will go to what? Local government. Now, 50% of 100 billion is 50 billion. Now, how would they now share it? Based on the current regime, 50% is equity. That means 50% of 50 billion will be shared among the 36 states, including FCT, which is 25 billion. Then, based on population, 30% of 50 billion will also be shared based on population, while the remaining 20% will now be on derivation. That derivation is now where the tax is being collected. And the states that are in most advantage for the derivation is Lagos and Port Harcourt as of today. Now, the new bill is now saying that no, that should not be the case. The federal government now said that, okay, you state government, I will give you the resources, but I'll take the abuse. That's what the federal government is trying to say. And I say, okay, for my 15%, I'll add 5% to what we were collecting before, which is now making state to have 55%. The federal government is still having 10%, while local government will share 35% of what is being collected in the VAT pool. Now, this 55% of 100 billion, which is 55 billion, how will now be shared? Then I said, no, before that equity is 50%. No, equity should take 20, population should be on 20, while derivation should be on 60%. But this 60% derivation will be a consumption model where the goods were actually being consumed. Now, the reality is that I think Mr. History will show some slide data for calculation. The reality is that if they should adopt this current proposed VAT law, some states will be at advantage, while some states will be at disadvantage. Before, Lagos State is still number one. Lagos State is still number one, but even though they still go to the new model, Lagos State will still be number one, but what they will be collecting will reduce. Now, I think what the government is now trying to do is that they want every state governor to be productive in their own space and to also be creative and also to be able to develop their local economy. And that will also stop over-reliance on federal government allocation. the area of baboon dey work, monkey dey chop is going to collapse. Every state have to be commercially viable. No state should be dependent on one state. You are saying they should not drink beer in my state, but you are collecting beer money. When they take money that they've collected from people that are taking beer, you are also partaking in it. States should not be economic viable. They have to not be creative in their own space. So what is not creating the debate is that people don't want to think. We don't want to allow change to happen. We can't continue to do things in the old way. As of today, the tax to GDP ratio is about single digits in Nigeria. Everybody wants a good road. If you want a good road, everyone good social amenities, hospitals, and so on and so forth. All these things have to be financed from somewhere. We can't continue borrowing from time to time. So for me, what I think the government needs to do is to see how we can increase our economic activities. Taiwo Oyedele has done a very good job, a very fantastic job, to the point that I want to portray on this, where they have to reduce CIT from 30% to 25% for companies that have turnover of less than 50 million. What that means is that companies will be able to have free cash flow to expand their business. And when they expand their business, government will take more VAT, and they will also earn more income from payee. So what the remittancy and the consumption model is just trying to say is that where the goods is actually being consumed, not where it's being remitted or collected, they are the one that should get the advantage of this new VAT proposed formula. That is what basically the consumption and the remittancy model is just talking about. In terms of remittancy, we are looking at the headquarters of those companies. And you and I know that most of those headquarters are in Lagos and Port Harcourt. But consumption is saying where these goods and services are actually being consumed. Another example is MTN. We have people in Kano that make calls. We have people in Kaduna that make calls. We have people in Abuja that make calls. Why should Lagos be taking the benefits? No. Let it be region by region, location by location, state by state. Let's use that one to begin to derive how VAT will be shared among various states in Nigeria. So that is what basically the consumption and the remittance model is trying to talk about. Hello? Yeah. So that is what is actually that is what is now actually talking about. So when we now look at the statistics of these things, like I said, he actually put some states into a more better position, and he put some states, is not favorable to some states. The reality is that there is no how a reform would be beneficial to all. But what we need to look at is the impact. What they are saying, would there be an impact to a common man? Is the impact that we really need to look at. Is there visibility in the impact of this new proposed formula to all of us? These are the areas that we really need to look into as a professional. And the reality is that there is an impact because it will make all of us to think outside the box. All those states that will have to develop, who have to depend on federal government allocation, they will now begin to look inward. It's just like a wake-up call. This tax reform is like a wake-up call to every one of us in Nigeria. It's like a wake-up call. So that is just the way it is. So I don't think there's any need of us putting politics or ethnicity in it that this thing is trying to favor one state or the other. There's a court at Supreme Court at the moment, which River State took federal inland revenue to appeal court or thereabout. I think the case is at the Supreme Court now. Lagos State also joined them in that suit. The reality is that the Supreme Court should give a judgment today, give a pronouncement or a judgment on that case today. What we are talking about will not be effective anywhere again, and the Rivers and Lagos will be at the most advantage. Will be the one that will have to benefit more. As we speak today, this is going to affect Lagos. It's still going to affect River State based on this new formula. but it's just that it will not make more states to be more creative in their own space. So that is all what remittance model and consumption model is just trying to talk about. The remittance model is just looking at the headquarters where those companies being domiciled, the states. While consumption model is trying to figure out that where those goods were finally being consumed and where the VAT should be attributable to. Thank you very much. Thank you for listening. Thank you for the opportunity. Moderator.
Thank you very much, Mr. Peace. Can you hear me?
Yes, I can hear you.
Please, let's put our hand together for Mr. Peace for the wonderful presentation. There is emoji chat there. Click on it to indicate that you have enjoyed the session. We are moving into the next speaker. Please also be reminded that questions, hold on to your question. Please write it down. Be professional about this. Write down your question. The speakers are still around. We return into answer all your questions. Just make sure you address the question to specific speaker. Mr. Fitz, thank you for your time, for the wonderful presentation. We are going now to the next speaker, which is Mr. Okay, we have 15 minutes for Mr. Fitz. I think, Abi, this is 11:15. Based on the time schedule, Fitz is supposed to stop by 11:30. That means Mr. David will take up with the remaining time. Mr. David, are you around? Hello, sir. Mr. David, are you there?
Hello, sir. Good morning.
Hello, welcome to ATILC Business School, a professional training institution that provides both ICANN and ACCA tuitions to students taking the professional exams. At ATILC, we have conducive learning environments, qualified tutors that can help you pass your exams. We have tutors with years of training experience, and our tutors can guarantee you a pass in subject matter areas. Why not join us today and let's be part of your success story? ATILC, your mentor for life.
Yeah.
I want to put more.
Okay, thank you.
Morning.
Okay, I think Mr. David, you have an extra time to play around in case you have more data to present. You have the flow for the next 40 minutes, please, up to 12. You can take on. Let's welcome Mr. David. Let's put our hand together for him and use the emoji there to welcome him on board. Mr. David, please go ahead. Jot down your question, please. You have all the time to ask the question.
So, good morning, everybody. Good morning, everybody. So, my name is David.
Good morning,
I'll be here to take us on the income tax assessment under the new tax reforms. So, you know that the beauty of
I hope your video is on, sir.
hold on. So unfortunately, the video will not be on. I apologize.
Okay.
I'm having a small challenge.
Okay.
I really apologize.
No problem.
Yes. So they can make do with my picture on the flyer. I'm still the same person. I look the same. Okay. So I apologize about that. Please. Okay. So currently we have 4 bills before the National Assembly, and we have Mr. Philip has told us that, or rather, we all know that at least they have passed the first and second reading. So amongst the 4 bills, we have the Nigerian tax bill, we have the Nigerian tax administration bill, we have the Nigerian Revenue Service bill, and the Joint Revenue Board bill. I'll focus more on the first one, which is the Nigerian tax bill, which basically harmonizes all the major taxes, majorly the corporate taxes, the personal income taxes, and the VAT. So I will just run us through the major changes in these bills. That's basically what I'll focus today's discussions on. You know that the beauty of this new tax change is that it is very important to those in practice. It means those that have qualified and those that are planning on writing the current ICANN exams. Because a lot of people have met me and said, this tax thing, am I sure I will still write this diet? And I'm like, yes. One thing with tax is that I always tell people it is the easiest course to pass, but then it is the most difficult to teach. And the reason why it's difficult to teach is because of the ever-changing landscape of the tax environment in Nigeria. Okay, so I will run us through the taxes. I will touch the personal income tax first, then I will touch the corporate taxes, and then just a small discussion on VAT, because I know another speaker would discuss more extensively on VAT. Okay, so currently we know that if I was to ask what the current pay rates were, I know most people would tell me the first 300, next 300, next 500, 500, 1.6, and then 3.2. Now, those rates have changed or will change. So they are now there are new rates that are going to be introduced once this bill is now, it becomes an act. So how it's going to be is the first 800,000 naira, that is per annum, would be taxed at 0%, while the next 2.2 million naira will be taxed at 15%, the next 9 million naira at 18%, the next 13 million naira at 21%, and the next 2.5 million naira at 23%, and finally, anything above 50 million naira at 25%. What this means is that anyone earning an annual pay of about 800,000 naira would pay zero tax within the year. So it means that those categories of individuals are totally tax exempted. What this means also is that anyone in the category of minimum tax or minimum wage will be exempted from the payment of personal income tax. So when you compare this to the previous rates, you will see that there has been a great reduction in the taxes, overall taxes that we as individuals will pay. As Mr. Philip said in his presentation, that how many of us earn above 550 million naira? I'm sure very few. Maybe it is the directors the directors in institutions that might be earning that amount of money. So for the rest of us, would at least have a reduced tax cut. Mr. Philip made mention of the fact that his salary is going to go up by 300%. I mean, 300,000 naira. So I just told myself that, thank God, because now I know who to be calling when I get broke. Okay. So aside that, what the bill also tries to replace is it replaces our CRA computation, the Consolidated Relief Allowance computation. You know, it was part of the relief available in the computation of our personal income taxes. You know, you have your earned income, you have your unearned income, then you have your consolidated relief allowance, then you have your other allowances deducted before you now start paying your taxes. Now, it also tries to reshape how the CRA computations would be done. And it replaces the CRA computation with what is called a rent relief allowance, which is almost very similar to that of the CRA computation. And here it just says it's going to be granted at 200,000 or 20% of your annual rent paid, whichever is lower. So that becomes our new template for computing our personal income tax. It means that any other thing that's not discussed here remains the same. It means your earned incomes, your unearned incomes, and all other reliefs remain the same. The areas that were affected were the rates for personal income tax as well as the consolidated relief allowance. So those are the two major places that were hit by this new tax reform. Now, let's go to the capital gains tax, because what the bill did is it tried to harmonize it. It tried to merge the capital gains tax into the company's income tax. So let us look at some of the new changes that would occur in the realm of capital gains tax. Now, while other presenters were giving their presentations, I heard some people exclaiming and saying, wow. No, the reason is that most people already see capital gains tax as a low-hanging fruit when it comes to exams. And also the changes are not so major, so it still remains as easy as it was. Just a few changes here and there that have occurred, and I'm just going to be trying to streamline the presentation into those few areas so that we can just have an idea of how the thing works. So one of the changes it has introduced is when it comes to the issue of compensation for injury and loss of office. In the previous act, what the act told us was that if you lose your job, if you are asked to go and they pay you 10 million naira, it means that 10 million naira and below will be exempted from capital gains tax. But any other amount of money in excess of 10 million naira will be subjected to the CGT. This act, or this bill rather, what it says is that whenever you are asked, you lose your office or you are injured in the course of doing your business, or you sue someone for defamation and you win the case, any amount of 50 million naira and below will be exempted from tax. But any amount in excess of 50 million naira would now be subjected to capital gains tax. So it means that if you are paid 50 million naira or 49 million naira, you will not pay tax on that amount of money. But any other amount of money, if you are paid maybe 51 million naira, only the excess is subjected to the capital gains tax. Okay, I hope that is very clear. It also gives a scenario also. It introduced I would say it's a new kind of scenario. It has been there passive, but very, very low key. And it says that gains arising from the disposal of a dwelling house, your personal house, or part of such dwelling house and land, other than land used for commercial purposes, immediately adjoining the dwelling house up to a maximum of 1 acre are exempted from capital gains tax. So it means that you sell your capital, your own private residence, or any land close to your private residence, as long as it is just maybe an acre of land away from your private residence, that amount, that gain on that disposal is tax-free. You won't pay capital gains tax specifically on that work disposal. And it says that you can only enjoy that once in the lifetime of an individual. So I think what that means is that if you are able to sell a private residence once, so that one is exempted. But if any other one would happen, then it might be subjected towards capital gains tax. Also, what it does is that it gives us a new, let me say, it discusses how capital gains tax should be computed. Usually we always had an issue with the tax people and a few other people as regards the previous capital gains tax computation, where you simply say the total disposal cost of the property less the amount the property was bought historically. That was how we computed capital gains tax. Sales proceeds less cost of the asset. Now, most people will always have the question that why would I be lessening the historical cost of the asset when the asset probably has depreciated over time? And I think that this is one thing that has been factored in this new tax bill. And it gives us two instances for computing capital gains tax. I'll just read them out and then try to explain them as a layman. So it says that the first computation, or the first way of computing it now, is that in the case of disposing of an asset used for trade, business, profession, or vocation, for which capital allowance has been made in accordance with the first schedule to the Act, only the residual of the asset shall be deducted from the disposal proceeds for the purpose of computing chargeable gains. What it's saying now is it is more or less doing what we used to call a balancing adjustment back in the days, when we say the disposal cost less the residual or the tax down value of the asset. And that's basically what we are looking at now in the computation of the capital gains tax. So we're not just saying the historical value of the asset, but now the actual value of the asset as at now. Okay, that is what the bill is trying to introduce. And then secondly, what if capital allowance was not computed on that asset? That's what the second one is saying. That where capital allowance has not been made in accordance with the first schedule to this act, the chargeable gain shall be determined by deducting from the disposal proceeds the amount or value of consideration in money or in money's worth incurred wholly exclusively for the acquisition of this asset. So it's now limiting it now to the fact that if I buy an asset which has not enjoyed capital allowance, that is when I will do the usual capital allowance computation of saying the sales proceed of that asset less the costs I incurred to purchase the asset. So now it streamlines it and says, if you have enjoyed capital allowance on the asset and the asset value has reduced over time, then there's no need using the historical cost, but using now the value of the asset as at when the disposal is occurring. And secondly, if there was no capital allowance computation on that asset, then you can now use the cost of that asset. Okay. Also, let's now talk about the tax rates, not just for capital allowance, but then for companies' income tax. Because as I told you, what this bill tries to do, the Nigerian tax bill tries to do, it tries to harmonize this tax, make them almost uniform, so that we don't have different rates and different things sitting around. So I think what it's trying to do now is that it's trying to make the capital gains tax rates similar to those of the company's income tax rates. And also the payments should be also made almost in the same manner as the company's income tax. So what it does is that it has divided companies into two. Before now, we had three types of companies. We had the large company, we had the medium-sized company, and we had the small companies. And the small companies used to pay tax at 0%. And I always say they used to pay tax at 0% because even though they are tax exempted, you must file your tax return as at when due, or else face the penalties or fines of those people that did not file at all. So I will still maintain it so that we'll get used to the fact that small companies ought to file their accounts even if they are tax exempted. And the medium-sized companies were paying at 20%, and the large companies were paying at 30%. Now, what it does is that it divides the companies into two. Now, there are just two major categories of companies. We have the small companies, and then we have any other company. So the small companies will still maintain the 0%, but then the any other companies are now the companies that make above 50 million naira will now pay taxes at different rates in different years. Now, in 2025 year of assessment, I hope we understand the difference between year of assessment and the business period. What 2025 year of assessment means is that any transaction that occurs within 2024 business period, which the tax year is now 2025, they will pay tax at 27.5%. And from 2026 year of assessment going further, will pay their taxes at 25%. Okay, so that's what it tries to do. So as I told you, it has streamlined the companies now from three types of categories of companies to now two categories now, the small and any other companies. Okay, so it moved from 30% to 27.5% in 2025 year of assessment, not business period, because people have this issue where they mix this things up. And then it moved to 25% in 2026, then going further, going upward. Okay. And I also told you that what it does again is that it tries to move the threshold of a small company from 0 to 25 million naira to 0 to 50 million naira. Now, if you have followed the trend from the personal income tax down to the company's income tax, what you will see is that the government is not so keen about generating revenue from individuals like the whole idea of taxes are, but to give the taxpayers a bit of breathing space, because you can see that they are exempting a lot of taxpayers and lots of companies from payment of tax. So imagine a company making 0 to 50 million naira being exempted from tax. I think is a huge win for small companies, small and medium-sized companies. Okay, so aside that, we used to have other taxes attached to the CIT payments in the year. So we used to have taxes such as the TET, the police trusts, and a few other taxes. Now, what this bill does now is that it has consolidated those other small taxes into one, and it called it the development levy. So the development levy has come to replace all those other taxes, the TET, and the TET and all the likes of those taxes. And what it does is that now what they will do is that there is now going to be a uniform tax for them, which they will now share at the end of the year. And what the rates of those taxes are in 2025 and 2026 years of assessment, they will pay a 4% tax rate will be applied. 2027, 8 and 9 years of assessment, 3%. And from 2030 going further, then 2% will be maintained. Now, how would these taxes be shared? They will be shared between the TED fund, the student loan fund, the information technology fund, and the science and engineering infrastructure funds. Those are basically the bodies that will be sharing the developmental levy that have been added to the company's income tax. Now, when I was discussing the tax rate, I also chipped in the issue of small companies there. And I say that small companies now, threshold has changed from the 0 million to 25 million naira to now 0 million to 50 million naira. Okay. So now these are the categories of what small companies, but then there is a clause attached to it. So it's not just being a small company because I made 50 or I make below 50 million naira. There is also a clause because there are some small companies that make, in terms of revenue, very small revenue, but have huge asset base. So what the bill does is that it looks into that scenario where you have small revenue turnout but a huge asset base. And I'm going to read out what it says and then try to explain to you. So it say the bill redefines small companies to mean a company that earns a gross turnover of 50 million naira or less within with total assets not exceeding 250 million naira. So it means that the worth of your total assets does not exceed 250 million naira. If the worth of your assets exceeds 250 million naira and you still make below 50 million naira, it would not be tagged as a small company. Please take note. So it's not just focused on revenue alone, but also on asset based, on the worth of your total assets or of your fixed assets. Okay. Also, we should take this also very importantly, that any business providing professional service shall not be classified as a small company. So it means that all these companies doing tax services, accounting services, the likes, even our institutes now would also, our institutes and the school would not be tagged to be a small company. Okay, this is very key. So now, let me just summarize again. That for small companies now, it is not just tied to how much money you have made, but then there are other factors attached to it. The first factor is how much money you made. The second thing they will look at is what is the worth or value of your fixed assets. And then finally, are you a professional service delivery company? Those are the factors they will consider in knowing the category of a company you fall in. And if you make below 50 million naira, but then you are into professional services, you will not be deemed to be a small company. If you make below 50 million naira and the worth of your fixed assets is above 250 million naira, you would not be deemed also to be a small company. So these are issues that we should really really look at. Now, just to wrap up, because those are the salient issues we have discussed. So I will just talk on a bit on VAT as I try to wrap up the session. Okay, I'll talk on VAT and capital allowance as I try to wrap up the session. Now, capital allowance was not left out in was also affected in the changes. just a few adjustments in capital allowance. So now what the bill tries to do is that initially, this we already knew. We already knew, at least from last year, that the initial allowance had been abolished. Sorry, the investment allowance had been abolished. So usually we used to have three types of capital allowances: the initial, annual, and the investment allowance. But the investment allowance had been scrapped out. So it's something that we should take note of. Also, the bill also says that when it comes to companies that have that make that their capital allowance is below 10% of their total income, there will be no need to prorate your capital allowance, to restrict capital allowance. No need. Just enjoy the full capital allowance in essence. Also, when it comes to notional value, we know notional value used to be at 10 naira, paid at 10 naira per asset when the asset has come to the end of its life but has not been disposed. Now, the bill introduced a 1% instead of 10 naira as the notional value, which will be maintained throughout the asset's life until disposal of the asset. Okay, so when it comes to the issue of VAT, I'm just discussing the major changes in each of them because not everything changed. So just a few issues, just a few changes in each of them. So when it comes to the issue of VAT, I know Mr. Afiz has discussed when it comes to the VAT sharing ratio, but when it comes to the rates of taxes now, the rate of taxes. Now, for VAT, a lot will happen as regards VAT in the next few years. Okay, so it's not just going to be something that's going to be done at once, it's going to be done over a few years. So for VAT, they are proposing an increase in the VAT rate. VAT increased from 5 to 7.5, and then we're saying that by this year, if the bill is passed, VAT will become 10%. And then in 2026, 7, 8, and 9 years of assessment, VAT will move up to 12.5%. And then finally, in 2030 and onward, the VAT will become 15%. 15%. Now, as I told you when I started this discussion, that what this is doing is it's considering a lot of issues. This new reform is it's not just considering revenue generation for the government, but also looking at how to leave disposable incomes in the hands of at least low income earners. So basically taking from high income earners and then leaving more money in the hands of the low income earners. So I think holistically, if you look at the tax reform, it should be a welcome idea because it's not just about making money for the government, but also about enhancing the Nigerian economy. So with these few points of mine, I will just say thank you and I'll wait for questions. Thank you very much.
Thank you very much.
Okay, thank you, Mr. David, for your wonderful presentation. We appreciate that. Ima Innocent and Ramsey Joseph, you guys are raising up your hand. Like I said, we will take all questions immediately after the presentations. So let's allow all the facilitators for today to take their presentations. Once they are done taking their presentation, we will now come back to answer everybody's questions. So just exercise patience with your questions. Keep your questions immediately. We are done with, even me, I have a lot of questions to ask because Mr. Philip had raised a lot of highbrows in so many areas that I need to look at. And I need to ask him a lot of questions as well in that regard. So let's be patient and allow the last facilitator to carry out his presentation, and then we move forward. So we'll be having Mr. Idris come on board to come and give us a presentation. Let me quickly share my screen. I thought my screen was shared earlier so that we can see what we have next. So we'll be having Mr. Idris coming up, and he will be discussing on specific changes assessments, comparative problems, and recommendations. So Mr. Idris' presentation is going to be very robust. As a matter of fact, he has a dashboard for us that will summarize most of these changes, the impact of these changes. We'll be seeing them. We'll be using some examples, to practically see what the impact of these changes will come. He's a public sector guru, so he has all the figures in respect to how this would affect state by state, and so many other things that we are not privy to. He will be sharing that knowledge with us today. So we have Mr. Idris. Please, everybody, put your hands for Mr. Idris. Please put your thumbs up. Let's welcome Mr. Idris. Thank you.
Hello, welcome to ATILC Business School, a professional training institution that provides both ICANN and ACCA tuitions to students taking the professional exams. At ATILC, we have conducive learning environments, qualified tutors that can help you pass your exams. We have tutors with years of training experience, and our tutors can guarantee you a pass in subject matter areas. Why not join us today and let's be part of your success story. ATILC, your mentor for life.
Yeah, you can mute yourself. Just be talking. Yeah.
Okay, hello. Good afternoon, everyone. Can you hear me?
Good afternoon,
Hello.
sir. We can hear you.
Can you hear me? Anyone there?
Yes, sir, we can hear you.
Okay,
So we can hear you.
thank you.
We can hear you, sir.
Okay, I can hear you too, Gertrude. Thank you, everyone, for your patience and your time spent here with us today. We appreciate. Today, we are going to go ahead on our discussion of the tax reform. My major focus, I'm not going to bring anything different from what the first speaker, the second speaker, and the third speaker have already discussed. I'm just going to specifically emphasize on some of these key aspects of changes. This emphasis, I have a slide to share. I think because of the time, so just like Mr. Philip concluded, they are good facilitators. Whenever you give us room, we can take the whole thing talking. So I will try as much as possible to quickly go over some slides while giving you the opportunity to study the slides carefully. We are going to gather all the material that was presented today, and we'll share them via your email. So make sure you register, you leave your email on your registration form, access it, and forward it to you. So specific changes proposed in the Nigerian tax reform. I will look at this thing in depth. Mr. Phillips talks about the changes. The reform is in 4 pieces: the Nigerian Tax Bill, the Nigerian Tax Administration Bill, the Nigerian Revenue Service Establishment Bill, the Joint Revenue Service Establishment Bill. Those are the 4 pieces. As a student of tax or a consultant, you need to know those 4 pieces. Download them. We'll also attach the bill in the materials we are sending to you so that you have the opportunity to study them carefully. Those of you that are tax practitioners, this is an opportunity for you to learn. Before we talk about the changes, permit me to take a few minutes to go over the existing law. What is the existing law and what is the change? So quickly, I'll run through the laws. They are all here, and the material will be given to you. These are some of the laws. Some of them have been amended. They amended the issue with presidential orders. The first one is the Company Income Tax Act, which require government the taxation of company profit. How much profit should be taxed? Remember that in Finance Act 2019, after 30 years of issuing Finance Act, the former President Buhari issued Finance Act that amends the tax rate. I think that is the key changes of the CETA that everybody proclaim and we all reject. It makes it kind of progressive in nature. We're a small company that earn 25 million below 25 million. Please take note. It's below, not exactly 25 million. Pay tax at 0%. We all remember that, isn't it? Also take note that the small company, based on the same Finance Act of 2022 and 2023, they exempt small company again from paying VAT. So if you are exempted from paying tax, company income tax will also be exempted from paying VAT. Then we also have the average or medium-sized company that pay tax from was the earn 25 million below 100 million. Again, below 100 million. I'll be sharing some data analysis here for us to go over or analyze the data together. Below 100 million. Tax is at 20%. Then we have the large company that is above 30%. So that is the existing law. And this law is going to change if the tax reform bill is issued. The new tax rate will not be 30%. It will drop to 25%, 27%, 0.5 to 25%. It is going to drop as it progresses. And the medium company, just like Mr. David mentioned, it will no longer be 25 million, it will be 50 million. You remember that, I hope you are taking your notes. So these are the current things. Then the Personal Income Tax Act also is there. There are also some key changes we'll go over the personal income tax. One of the key changes is the tax rate, the progressive tax rate, from the lower limit to the higher limit. We start from 7%, progressively 11%, up to maximum of 21%, isn't it? So it has also changed. There are a lot of changes here, especially those writing skill tax that you need to be aware of. If I can decide to adopt it in the way that I still believe that as soon as it is approved, I can will adopt it. There will be no delay. So there will be no need for you to be wasting time. It's important you are here and you are learning what we are doing. And consolidated relief annual. You remember consolidation really popularly, it has been destroyed and removed. It has been replaced by something called rent allowance. Rent allowance. It's more focused on those who pay rent now. The maximum rent allowance is 100,000 in the new law. We'll look at the section together. Of course, that's the maximum rent allowance, which means if the rent allowance, your rent is below 200,000, then it takes the lower. And that is why we use what we call the if function in the Excel issue by the FIRS. Also, then the next is the value added tax. I think Mr. Afisa have discussed some of the changes in the VAT, and I will be discussing more on this later. The key changes in the rate. The current rate of VAT is 7.5%. This is going to increase slowly, incrementally, slowly. I think in the next 2 years, I hope I'm correct, in the next 2 years, slowly. We'll look at that, it will go up. We'll talk about the impact of all this too, within the little time we have. Then the next, each of these are the current law, they are their LFN, is giving the cap and the amendment. The next is the petroleum profit tax. There are also some changes in the PBT that we know. We'll discuss some of the changes. The rate has not been changed definitely, but some of the allowable and disallowable items were expanded. We'll discuss this briefly. Capital gain tax, the rate remains the same. Again, some items are not chargeable to capital gain tax, like in those days in Forex. Foreign currency are not taxable. Now there will be those of you that like keeping dollars, you'll be paying tax of it. It's not new actually. If you look at the UK tax system, I consult on the UK tax system, they're not managed by the HMRS. Foreign currency is usually taxed. In fact, even Japan, like painting, in this old painting ship, they are all taxed. They are not taxed here in Nigeria. I think very soon they will also be taxed. The next is Stamp Duty Act. You are all aware of the is it, what did they call it? Electronic transmission something levy of 50 every 10,000 50 naira. So stamp duty also is being affected by the change, and tertiary education tax is also being affected. We will discuss most of these changes. I don't intend before some light with that time is up. We have. And then the Custom Exercise Management Act is one of the old acts that talks about import and export duties that we pay is also being affected. Mr. Philip already talked about the Joint Nigeria Tax Administration. The proposed bill on not the joint tax establishment, the other bill on the Nigerian Revenue Service establishment. So there is this issue of whether custom will no longer be custom. No, custom will remain custom. But some of the duties they collect will now be shifted to the Nigerian Revenue Service. So please be clear. Those of you that are working in custom, I think I have some few students that are custom officers. They are not going to lose your job. So that we don't create panic. The aim of the training is to create awareness, to educate, not to create confusion and misinformation. So you still have your job. Your job will now focus on mostly implementation, which is what the police do. The police don't collect revenue. However, they ensure that the law is being followed. Withholding tax also is being affected by the changes. We will discuss some of the changes in the withholding tax. Some individuals, small companies are no longer allowed to collect withholding tax. There are certain conditions that you must meet before you can collect withholding tax. Then we have the Finance Act 2019 to 2023. It's also been affected. Industrial development, income tax relief. I hope you remember the industrial development income tax relief, which is given. This also will be affected. I want to move as quick as possible. We have the Tax Administration Act, the Nigeria Export Processing Zone Act. Yeah, this will be the reform actually affect the export processing zone. I think there's something they call the free trade zone. I don't know if you're familiar with that terminology. An area where it will do is within a country, but it's considered not the country in application of the law. You can sell things and goods without the charge tax. There is an amendment that affects the free trade zone. Time may not permit us to discuss all the changes, but we definitely touch within the short term as much as possible. The local government taxes and levy, also one aspect of the law. I think local governments stand to benefit the law. So with your permission, I would like to look at the affected section of the law. And again, most of what I will highlight have already been discussed by the previous speakers. So I will just quickly highlight them. If you have a question later, I don't mind going back to the slides to explain more. So let's mark some of the changes. Company income tax section 9 will be affected directly. Section 9 will be affected. All the speakers are talking about section 9. The expansion include digital services revenue. Yes, there is now serious tax will be on those who use app application, etc. The tax rate remains the same. The existing tax rate removed. I just use this as an example. A global digital service provider, 800 million in Nigeria from advertisement. Post reform is supposed to be 30% corporate taxes applied to Nigeria income. I mean, you remember what you do in income tax. Identify the Nigeria taxes in it, and then we also identify the global tax. Some of the tax literalists to call it, I think, 10 commandments or something. That's 10 principles. If your memory is still good with advanced tax, those taking strict tax, and when you grow up, you learn that over head. I don't think it's your problem. So the 30% apply. That is what is happening currently. I mean, so taxable amount will be 30 million. And please also take note, section 40 of the CETA has already been amended. There is no longer minimum tax. Minimum taxes apply when a company either because generate loss. I mean, you generate loss, you pay minimum tax, or the amount of tax you are supposed to remit is lower than the amount of the minimum tax. It's actually a percentage of turnover. That has been eliminated. The global standard is that a company will not make loss and still be paying tax. I don't know whether you get it. Loss is a painful thing. You make loss and you are feeling bad, and then you are not asked to pay tax, which is not fair. And tax is established on a principle of fairness, equity, transparency, and accountability. So that is one area of the law that is expunged. My participant following me, can you give me a sign? Let me know if I'm with you. I'm a bit slow. I talk slowly so that you can follow. I will copy Mr. Philip very soon. As a command of all this discussion, and just deliver it very fast. So I will copy that style very soon. Are you following? Okay, thank you. Now let's go on to the next slide. So minimum tax expunge. If we look at the digital, this person earning 100 million, the tax will have dropped. Will no longer be 30%, it will be 27.5% by next year, and upper it will now be 25%. So if you apply 25% to 100 million or 27.5% next year, this digital company will be paying 25 million tax, which means the new reform will have saved in terms of 5 million. I mean, so the next one quickly, corporate income, medium to large company. I think I've discussed this. You'll be getting this slide. From 2025, tax rate will be at 25.5. I mean 2025. Guys, I keep keep writing 2024 most of the contract document slide there. So 2025. So in this year, I think I'm okay to use this year. Section 45 of the Nigerian Tax Bill proposed 27.5%. So which means going back to the digital company that 800 million, 27.5% of 100 million will be paying 27.5 million instead of 30 million. The same based on size, small company exempt from corporate tax. From 2026 further reduction, there is a further reduction, please, of 25%. That means in 2026, company will pay income tax at 25%. Please also be aware that the tax usually for those who are not accountant, I realize some of our participants are not accountants and they are not also accounting students. We have economics in our list. We have even finance expert in our list. Tax are not usually paid on income. They are paid on what is called taxable profit. The taxable profit are usually computed with strictly the format. The format of calculation has now been made easier. Please go, it's been simplified. If you go to a tax format, maybe in our next year, we will create some time to teach you how to use the tax format. It's very easy, very friendly. Very easy. So the format is normally We use the accounting profit first. Accounting profit means the profit on your statement of profit or loss. So if the net profit per account, there will be now less what we call disallowable expenses. That means some expenses that you have deducted, which the tax law refuses, did not allow you to deduct. Then we add it back. I mean, we add back disallowable expense. Then we now less some incomes that are added, which are not taxable under trading income, will be deducted. There is also less some expenses that have not been deducted under the accounting law. Expenses like capital allowance. Then you now arrive at what we call the global income. Although also the law allows you to less any carryover loss, something called loss currently loss relief, and carryover loss relief. It is a format that we keep preparing for our client. So these are some of the changes with the illustration. Tax exemption for small business with annual turnover of 15 million or less, including withholding tax. That's very important. There is a relief for withholding tax for small company in the next bill, not the current. So relief. So if you are anything to 50 million below, that also will be affected. Then let's quickly move to personal income tax. In personal income tax, there are changes. Mr. David has discussed this one. I will always mention them. I will be quick, very quick. But I will send you this is the rate for the personal income tax, the current day and the next day. So you can see if the first 300,000 is at 7%, I mean, then the next 300,000 is 11%, the next 10%, the next 21%, the next and next and next. So this is so. Let me take you to a payroll format, which I will be sharing with you in the training. Let me take you here quickly. I want to show you something quickly. So this is a template for tax. Now this person is earning 300 monthly and is earning 3.6 million. Look at G, they call G 300, 3.6 million. Now, these are some of the deductions. You have what we call earned income. These are daily talk about earned income briefly. Then you have the NFA. All these are liable deductions by the law. You have an employer-employee pension. Take note, employer pension is not allowed to be deducted or we use it to do the calculation. The allowance here is the employee pension. In the format, I included some column as a practitioner, included voluntary contribution, which we can encourage employees to contribute to their pension is allowable under Section 7 of the Pension Reform Act. Then we have the total allowance. Then we have the chargeable income. If you look at this, the cell is where the template is well linked. So you have the total income minus, or the earned income minus the total allowance. Then if you check the computation is the if function. So we have the first 300, it starts at what? 7%. So this person that has a chargeable income in 1.7 million, 1,448,000 in annual income, the total will be paying tax, and then its annual tax will be roughly 255,000. Are we there? To using there. So if you just input, we take this template, you just input any amount. So whatever is your salary, just input P.
We can't hear you again. No.
I shall mute. You can hear me? Hello, can you hear me?
Yes,
Yes,
I can hear you now.
Yes, I can hear now.
Yes, we can
Is
hear
your
you.
screen also showing?
But we
Your
are
screen
not seeing
showing?
you again. We're only hearing you now.
You can't see me. Okay. I think the link has been there. You are working on the link. The host is working on the connecting.
Yes, sir, the screen is showing.
But the screen is showing. Okay. Please, you are working
Yeah.
on the visual. We'll see the
You can
visual.
go ahead. Go ahead. Go
So
ahead.
I decided to take some time, although in a bit of a hurry, to see if I can use the current FRS template to regenerate the PE using the current law and apply it. I didn't have time to finish, but I quickly got what I think I can use to illustrate to my student here. So although I think some amendment has been made to the amount, but if you go back, let me take you back. Let me leave the template. We can't see on the screen. Okay. Sorry, please. They are working on the host is working on the sharing because there are people here with me and they can't see on the screen. So I'll just go back to the last slide that I shared. On the last slide I shared, from now on, the first 800,000 an employee make will be taxed at 0, and then above 800,000 to 2.2 million will be taxed at 15%, and then above 2.2 million to 9 million will be taxed at 18%. If you remember that up to 1.6 million was taxed at 21% before, up to 1.2 million, it starts at 21%. So there is a lot of saving for individuals now. And let me give you a practical example. There is effective tax rate. It's also computed there. I screenshot this one out and I added it here. Please, you can go and check it. And I would think if I should give you the template I have developed, I'm still developing on this thing. Now, example, an individual earning 5 million annually was taxed at 19%. Abi, do we agree? An individual earning 5 million was taxed at 19%. What do we mean? At 19, the new rate may reduce it to 15% and saving 200,000. Tax saving 5 million times 19% minus 15, which means you'll be saving 200,000. So these are the effective rates applied to it. Now, Section 36 of Consolidated Relief Allowance changes. There is an increase in allowance for middle income. Like I said, there is something called rent allowance. We have more and more illustration that I gave here, but time will not permit me again to go over everything. We have another meeting later. I will answer your question. Want to give you more time to ask questions. So personal income tax, okay. I will discuss the exemption threshold section. Sure. Okay. Sorry, the host is still working on the visual.
We can see the screen, sir.
Okay, thank you. The host is working on the visual, so I think now you can be able to see the screen and see what I've shared. So the next one, the personal income tax, that's some of the changes are highlighted. The administrative changes I did discuss on that. The source of the data is also included on the slide. As a PhD student, most time we like to make reference to show whenever we gather data or collect data within citation. So I've cited all the references where you can get this information, but some of the example and calculation I generated it myself, so you can apply that. I also give example of how much we computed in one way or the other. Now let me go to the next one. Value added tax rate increase. Value added tax rate increase. The VAT, which is the value added tax rate, the proposed reform include a progressive VAT. I think Mr. Fitz talked about it, but he didn't talk about the rate. I need you to be very clear with the rate. Because if it's going to be an exam question, they will ask you, okay, how much VAT will this person pay in 2026? How we are today? How much VAT will we pay in 2027, 2028? You know how your examiner said their question. Most of you are not new to the examiner style of exam questions. So the VAT currently is 7.5%. I mean, from 2025, it will increase to 10%. So if the law, because they wanted to accelerate the bill last year, but there is a lot of call to halt the bill. If the law has been passed, this year VAT will have been 10%. But if it is passed today, the VAT rate will be 10%. Now, we will discuss some of our advice, we give some suggestion here. VAT is a fiscal policy, not monetary policy. Tax is a fiscal policy, not monetary policy. So they are concurrently. Anytime you are making a monetary policy, it must correlate with the fiscal policy, otherwise there will be a hammer. So as professional, I will really urge you, don't talk anyhow on some of this reform unless you are well informed. I hope we are together. Most times you go to television, you see professionals coming up to talk. And most times they are misleading the public because they are not hitting it directly. You have to cite the law. You have to understand so that you don't mislead the listing. And remember, in audit paper, we have what we call integrity. We say it has to be honest and straightforward. That honesty is talking about anytime you are giving an information, you must refer to the source of that information. It's very important. And make sure you keep your personal emotion and opinion to yourself. If you want to align with your professional judgment, you do it here. Thank God all the professionals that are coming here, all the speakers, are not just chartered accountants. They are also CITM approved. So which is very important. Okay, so the increase is 2025 from 7% to 10%. Guys, did you notice 2026 is 2029? How many percent? 12.5. What about 2030? 15%. Now, there are some good news here, and we also have this is the sad news we have that VAT will be increasing. Now, whether you want to say it or not, there are some certain items that are exempted from VAT. In fact, people are celebrating that these things are being exempted. But even long ago, they were exempted. I hope we are clear. It's not like it's the act that merely exempt, only increase the threshold, added more, and the agricultural product has been exempted as long as Nigeria has been in existence. Are we together? So, so will this correlate to the increase in price of goods and services? Of course it will. Of course it will, but the argument here that is put in places are not basic goods and services, not those things that you and I need, the masses need, like food product, basic things you need to eat, because VAT has been removed on those items. But of course, you know, even if it is put in some items that are high-class items, it will find its way back to the masses one way or the other. Now, that is the changes on the VAT rate. The VAT rate change. Example, if total VAT revenue is 1 billion, so what will be the allocation rate? I would like you to look at section 82 on the Nigerian tax bill. If you have a copy there, open section 82. If you don't have a copy there, we'll send you a copy at the end of the training. Section 82. If total VAT revenue is 1 billion, how is this VAT shared between federal, states, and local government? How is this shared? Now, let me take you here under section 40 of the VAT Act of 2007. The federal government, there is something we call vertical and horizontal sharing. Vertical and horizontal sharing. Any of you have passed public sector exam at ICANN level will be familiar with this. If you are not an ICANN student, then probably you have read the law. It is part of the Revenue Organization Act. The vertical sharing is a straight line sharing between the states, the federal government, the federation, state, federal government, and local government. Currently, all VAT, cumulated VAT amount, apart from the first line deduction to FIS and custom, how we are there? The federal government takes 15%, the state government takes 50%, and the local government takes 35%. Currently, it's called vertical allocation. For those who are ICANN students here, you should know it from public sector. If you have not done public sector, you are planning to do, then write it down. That is commonly examinable area in the paper. So the currently, again I repeat, currently, vertical sharing, 15% federal government, 50% state, and 35% local government. Then we have another formula called the horizontal sharing. The horizontal sharing is amount shared between the state government or the local government among themselves. In Nigeria, we have 36 states plus Abuja. I don't know which one Abuja, but the law says 36 states plus Abuja. You say 37 states. But in the share, there's something weird I identified when I was going over the market and they are sharing the calculation on their websites. I realized that the allocation currently is not meant to Abuja. I hope we are together. Now, which means Abuja is falling into the federal government. You know, when the federal government take their share, they have what they call the further allocation. Federal government share furtherly among some parastatals. FCT takes, I think, 1.68%. Then they have the ecological fund, the stabilization fund. They also share among them. You can go to the remark Act for that detailed analysis. Now, horizontally, currently, it is shared based on 3 indices. The first one is population, equality, not equity. It's not equity because we tend to confuse equity and equality. I don't know how you get it. It's not equity, it's equality. So equality means equally. When I share the slide with you, see it's equally. So for example, we have 4 or 5 here. So somebody, Dangote come in here and give us 5 million. You guys don't share 5 million. At least Dangote because it's the richest one in Africa. 5 million is one thing. So 5 million equally means 5 million divided by 5. Agree? Each of us go home with. Is that equity? That is not equity. How we are together, but that is equality. So please let's not confuse it as professional. It is equality. So which means that the current sharing method is 50% on equality. Which means if VAT is 1 million, 50% of 1 million, which is 500,000, will be shared among the 36 states equally. So I will take you to the slide. You see how I allocated it was equally. I hope we get it. The same amount. So it doesn't matter if, for example, when I'm going to give 5 million, it is not telling thank you. I didn't even look at it. I think I'll still get my 1 million. Equality. So which means that if, for example, your state did not generate any VAT at all, they will still get 1 million. How we are there? Are you following? Because some of you have been saying, people keep calling me. I remember when we know so many colleagues keep calling and let's discuss. Why are your people angry? The Northerners are angry. Why are they angry? I say, I'm not even ready to know. I'm going to start telling you why they are angry. I can't tell because they are two is understanding the law and understanding why a particular individuals or people are angry. But I think when we finish, if we do our job well, we should know why some people may not really want to know. It's one thing for you to tell me it's beautiful. Politicians look for their interests. I hope you know. Politics is a game of interest. Don't blame them for that. It's a game of interest. Always try to see how you protect your own interest. So 50% on equality. Are we clear with that? 30% on population. And 20% on derivation. Derivation means how much VAT comes out from a state. Internally generated VAT from a particular state. Now, I will elaborate more on this because this is the area where I'm supposed to talk more on. Now, this is the current sharing by law. I've given you reference to the section of the law, section 40 of the VAT Act of 2007, and this has been maintained for now. Now, the new regulation is trying to shift it. Can I take you back to the vertical sharing? What do you say the federal government take under the vertical? Those of you that are participating in this forum, those of you sleeping, may God forgive. Those participating, what is the sharing? Federal government. Can we start? How many percent is federal government taking? 15%. Somebody here. 15%. 15%. Now, 15%, federal government have, in the new reform proposal, they will take only 10%. The products, I mean, federal government is not taking under vertical, now federal government is 10%. Then state, how many percent? Before, currently, not before, currently, 50%, I mean, state will now be 5%. Local government, how many percent? 35%. Women, 35%. If you ask for, that would be 100%. That would be 100%. So that is the sharing, the allocation method. This is because we understand your professionals and need to know this very well. So this is how the sharing will be done from now. Let's go to horizontal sharing. The horizontal sharing has been adjusted again. Before now, when you we mentioned that it is shared based on 3 indices, population equality. Remember, I said not equity is equality, and then number 3 on population derivation. Thank you. Population equality and derivation. Those are the 3 key indices. So the same indices remain, but the rate change. The proposal is that 20% should be shared on population, 20% on equality, and 60% on derivation. Now, the definition of derivation before and now has been changed by the law. Let's get that clear. Derivation before is how much VAT is remitted to your state. It's what we call the remittance. Remittance means that, for example, now, I want to give that land some money. But that land is staying close to Philip house, the same area. So I will now send the money to Philip to give that land. I hope we are together. So if you are asked how much money did you get from Idris, that land will say, I didn't get any money from Idris. I get from Philip because it was Philip that gave me the money. So every company, wherever the company is located in Nigeria, they have one single model in remitting VAT. To simplify the system of calculation, the CFO of most multinational corporations, multinational entity, they are called MNE in the law. How we are there? There is what we call the centralized collection procedures. So under the ERP template, if there is an ERP like Sage, QuickBook, SAP, you whatever ERP is a home ERP. I heard that there are so many different uses. The accountant of Dangote, the chief accountant is in Lagos. That the CFO is in Lagos. CFO, finance director, you know that the chief accountant of the company. All the accountants that are the accountant of the office in Sokoto, the accountant in the office in Barbo, the one in Port Harcourt, Edo State, that is Benin, etc. Any VAT that they collect there, they will put it on the breakdown and send it to their head office in Lagos. The CFO will do the computation, have a template self-generated. All the amount generated is there. He will calculate it and remit it through the office in Lagos to the Lagos State government. Now, the Lagos State government will now collect that. We have collected social value, which was not generated from the state. It was remitted through the state, through the CFO that is located at Lagos. Lagos have beach, they have so many liability, most say for one place that is likely, so that they will enjoy. Who have stayed in the local place. So you collect the VAT, it's easier and remit it to Lagos. And Lagos will now state that this remission is done from social company and through my state. And Lagos will take share from that. But the share Lagos take is 20%, then before, which is not much. Now, the derivation is now called based on consumption. That means, no, we will no longer collect the VAT to Lagos. Every state, even if you remit it to Lagos, will be using the data generated by the company. How we are together. The company should tell us where it's not possible all the VAT is made in Lagos. Let me give you an example. MTN is one of the companies that remitted the highest VAT in Nigeria. They are number 1 company in VAT remission, according to data, available data on the domain. But all MTN remittance goes to Lagos, 0% to other part of Nigeria. I think I have some of that data here. So we are picking out the data. So MTN remittance, MTN remittance. So this is some of the simulated data. So MTN remitted currently, if MTN remitted 120 billion, the whole remittance goes to Lagos. I don't know whether you get it. And then it will now be allocated all to Lagos. So look at the allocation now using the model given, the horizontal allocation, not vertical. Now let's say 120 million is allocated to state, billion allocated to state. Share based on the allocation, MTN will get 24 billion. I don't know if my participants are following this calculation. So it's 20% of 120. MTN is getting 24 billion. Share based on equality. Remember, I said equality is equal, I mean? Yes. So they will not take 50% of 120 billion. That will be 60 billion. I mean? Then I use only, in my case study, I use like 6 states. Lagos, Nasarawa, Kano, Enugu, divide by 6. That would be 10 billion. I mean? You see, equal, even though Nasarawa, Kano, Enugu, but did not collect anything, was not remitted through. MTN was not remitted through Barino, but they were able to succeed to get how much? 10 billion. Now let me take you based on population. Based on population now, we allocated some number of population just for gain. Just for gain. How we are there. This is not a true reflection of it. If you want to know the accurate population, please bear with us and stay online. We are going to get there. Now, we take 9 million to Lagos, 1.8 million to Nasarawa, so it's normally how we calculate it in public sector paper. We take 30% of the 120, how we are there. We divide by the total population of the country, which means divide by 31,589,000, 0.6. Then we multiply by the population of a particular state. That is how this is generated. So based on this illustration, Lagos have 9 million followed by Kano. You can see Lagos is still getting higher again. Kano is getting higher here. So, but the question here is that only Lagos get observation. So allocation. Total, Lagos is getting 44 million. How we are seeing? While Nasarawa, etc., and the rest are getting 12.2 million. So you want why is Nasarawa getting 12 million when they didn't generate anything? Of course, they are Nigeria. Being in Nigeria should come with a benefit. I hope you get me. Those of you that people don't generate anything and are getting no. The fact you are in Nigeria is supposed to come with what? If they're just like you are a US citizen, you come to Nigeria, you're kidnapped, you have to send military to come here because you are important. Are we together? So yeah, those people were getting something, even though they didn't generate anything. And then this is how it is allocated. Now, what is the proposal? The proposal is that the derivation is not 60%. Lagos is feeling bad that I got 44. I should have gotten more because it was through me. I mean, but we're now asking that what is the consumption? That will not be what we call consumption attribution. So we get each company will give us the data. I think you will understand well when we get to comparative problem. The problem will not be data collection. How we are there. But we'll talk about that when we get there. So 60% on derivation, which means 60% of the 120 million will be shared based on what is the consumption. I hope we understand that the state that have high disposable income will definitely consume more than states will have low disposable income. Now, for those of you that are not accountant, disposable income means the income that remains after you settle all your basic expenses. That money that remains in your pocket, you buy a charge card, if mama puts on your own without going home to eat, to buy fuel in your car. So any state that have more disposable, it is that extra money that will make people say, let me go and rest in Sheraton Hotel this weekend. I'm tired of my pet. You know, you don't get more disposable income. It's not only madness. I hope we are there. The higher the disposable income, and sometimes the more you want to rest or relax. Now, so 60% will be shared based on derivation. And using this extrapolation, you can see the data. The data doesn't lie. We have Lagos still getting 25 billion. because Lagos have high consumption rate. But let's not get anything before. It's now getting 8.6 billion. You know, before under derivation, National did not get anything. Now it's getting something because the reality is that there are people in National that consume MTN service. I mean, they are there. So it is fair for them to get something. And all other states that didn't get anything were not getting things. Enugu is getting 8.6, Akwa is getting 8 point something. So, but however, inequality has reduced. Because before equality is 50%, now it's 20%. 20% of 120 divided by 6. You see now they are getting 4 instead of 10. Share based on population is also dropping because the non-amount allocated to population is no longer 30 to 20. I hope this illustration helps you to understand the model very well. Like I said, the training is going to be practical. That is how we do our training at ATILC, practicalize this on, so that you can go home saying that you get some skill. Anything here? Okay, I was told your question will come in later, so please write it down if you have a question. But don't forget, I'm not the only speaker. That carry the question to Mr. Philip, like I told you, Philip is a part of the committee that was making, that created this problem. So, question more to him. So, value added task add, and it's ready. You said that I was there very early. It's ready for it. So, value added task add. There are certain goods that are exempted. I would like us to highlight that a bit. Zero rated goods and exempt item. What's the difference between zero rated and exempt? A zero rated goods is a goods that be charged input VAT, but you are not allowed to charge output VAT. Now, output and input. Output VAT is a VAT that is charged on sales. For example, now, let's say that I'm buying cotton wool to produce clothes. I'm buying cotton wool to produce clothes. Or I'm buying, cotton wool to produce. Now, I paid VAT in buying cotton wool because maybe government wants to discourage the purchase of cotton wool. It's a very important item that government wants to preserve. And I paid VAT of 7.5% for cotton wool that I buy of 1,000 naira, which will pay 7 naira 50. I mean, 1,000 naira, 7.5, 7 naira 50. Then I now process the cotton wool and I sell it for 2,000. Now, process it become clothes. Definitely, I've added value. I think that's the meaning of value added. I've added value on the cotton wool I bought and I sell it for 2,000 or more. Now, I was supposed to charge another VAT of 7.5% on 2,000. Again, now if I charge 7.5% of 2,000, that would be 75 times 2 will be 150. I mean, 15 naira. So I will not give FIRS 150 naira. I'm meant to remove my input value, the one I pay when I was buying the cotton wool. I will actually, which is a 75.9.5. I will remove it and I will remit 75.5 to FIRS. The task force has a template, they just input the file, it will just come. I hope we are there. Then that's what we call VAT charge. VAT is charged on the net amount. Company does suffer VAT. The VAT is suffered by the final consumer. It is not the company that is the person who consumes the goods that suffer the VAT. Now on zero rated, when I buy cotton wool, do you remember I pay 7.5%? When I wanted to sell clothes, I've turned it to clothes. I want to sell the clothes, the shirt. Government says that they don't allow me to charge on dress. I should tax the VAT at 0%. I hope we are doing that. Because that particular item, the VAT rate is 0%. It's important. They don't want the price to go up. They want to minimize it. So my 2,000 with at 0, which means my output VAT on that clothes is 0%. I mean, but remember, I paid input VAT of 75.5, which I have paid to the person, the allergy that I bought the goods to. So who is losing? Remember, in fact, the company don't lose. I don't know how you get it. So the government will now remit my 75.5 back to me. That's what we call zero rated goods. Those goods are supposed to be taxed as zero. So they are valued, but at 0%. Exempt rated goods are goods that you are not supposed to charge VAT on them at all. So your input VAT is not recoverable. If you pay input VAT to get those goods, you will not recover it. But in zero rated, you can recover your what? Input VAT. Are you clear with the difference between zero rated and exempt rated? Yes. In zero rated, you recover your input VAT. In exempt rated, the input VAT cannot be what? Recovered. I'm talking to those who are economists here because you are the one in the call for television to analyze VAT matter. I don't know why. I hope we are there. Because every news I open, they call the economists. I don't know what the accountant calculates. I don't know when the economists start calculating VAT and they start speaking grammar. Probably the accountant are not good at speaking grammar. That's true, actually. They are more familiar with the numbers. So this is what it means. Now, there are items that have been rated Z, basic food item, educational material, healthcare product are zero rated. Exempt items, rents, public transportation, renewable energy products, your solar system, how we are to do that, they are now completely exempted. Any company selling solar system will not recover an input VAT, so you cannot increase the price on the output. So I hope that is clear. Let me move on. I'm sorry, looking at the time. The time is waiting. Okay. Value added taxable goods and services, online streaming. I think I have explained this enough. Petroleum profit tax, I won't take long because this requires some special training. I've added some few things. You can go and look at it at your own convenience there. Some of the changes to section 6, accessible profit changes on oil company, tax on joint venture, etc. Stamp duty, we talk about EMTL, the electronic transfer. So for digital transaction, I think now it's 15 naira. Withholding tax is also here. I won't take time because I'm seeing that time is. I want to take you to the spreadsheet. The spreadsheet, my PowerPoint contains almost a lot of items, specifically on the changes. So I'll share it with you. Don't worry. Anyone that you still need further clarification, you come to ATIC, they will give you my number, or you can, instead of calling me, I think you should call me. I hope we are together. You can call Ogafi. In fact, it is duty to explain to you ahead. Because if you ask me too much, I can charge you consultancy fee ahead. So since I'm not under the federal government payroll. So, but please take some time and go over some of the changes, learn some of these items that have been applied, and it is important that you can explain this without bias. Then quickly, then we have the comparative programs. I identify some problem I see with that. Before we talk about this problem, let me take you to the spreadsheet, the dashboard here we prepared at ATIC. Our team came up with a comparative dashboard of the current and the proposed. How we are together, the current and the proposed. The data here we use on the dashboard was from 2021 January to August VAT related to states 2021. Please take notice of old data, but they are all actual data. You can find this data on the Nigeria Bureau of Statistics website. They are available there. We pick the data there. All we need is to generate a template. Now, a dashboard summarize, visualize all the information you need to present. Those of you that have contacted your firm, I believe you're familiar with the use of dashboard in your management meeting, where you summarize everything in one template. We try as much as possible to capture it. So time will not permit me to go over everything, but I'll be strict here. Now, the first thing on the dashboard is state by state collection. Currently, what did each state get and what are they going to get? I hope we are together. So Abia has population of 4.5 million. They have a landmass of the landmass is the actual landmass of what they have. 6,320 landmass. They generated a VAT as at August 2021 of 2.29 billion. Generation of VAT, simply means that VAT of 2.29 billion was remitted through ABIA. Because I really need you to be clear with consumption and remittance, or remitted through ABIA. However, ABIA collect 20.020 billion. You see where people are saying, well, how will they collect this when they only remitted this small? Some people say it's a northern state that no, it will affect so many states, not just the northern state. It's just that they are more vocal. It's expected because almost 90% of northerners are politicians. So everybody is politician, even if you don't have one thing. So 20 billion is what ABIA is collecting. Now look at the next. Let's look at Adamawa. 5.4 million people in Adamawa. 36,917 landmarks, and they generated a VAT of 3.68 billion, and they are collecting how much? Now, let me quickly, because of time factor, let me take you to the proofs. How do we get the proofs? Now, number one, our calculation is 40. Let me quickly tell you the fault of the calculation. What we first do, ATIC was to assume that, this is the derivation as of August 2021. We now assume that it is the consumption. I hope we are together. In the actual sense, the consumption will not be based on, it will not be on the same variable as the derivation. There will be cap, limit, index, inflation, etc. I mean, so many items will be applied. So that is one fault with our data. The data is in the derivation as consumption to enable us to compare. So, but we actually use the correct rate for the calculation of using the reform, which we have here based on 20%, 20%, and 60% derivation. Equality 20% population we apply. Did you see this one as the same in this data? This is for equality. No, it's equality. Yes. So based on the total VAT collected as of August 2021, we now share it equally among all the states. Then we apply based on population. The population is a realistic population. The population of the state, the data available as at that date. Nigeria has 438 million population. In case you I hope we are there. So we use that population to apply this. So that is how we arrive at this data. So let me take you to Abia. Remember Abia State with population of 4.5 million, Abi? Yes. That generated 2.9, Abi? Using the same amount as remittance, they will be collecting 10.97 billion. Let me quickly move you to Bauchi. Bauchi will make a basis of comparison. Look at Bauchi, 45,000 landmarks, more than 10 times bigger than Abia. Did you notice that? Yes. Bauchi generated 5.3 billion remitted to Bauchi. But now we are assuming that it's consumption. Bauchi has a population of 7.6 million. Do you remember Abia have less than 7.6? 4.5, Now, Bauchi will be collecting 18.2 billion under the proposal. What is Bauchi collecting now? Let me take you back to the same type of one. Bauchi today. Let's go to Bauchi. The same population, the same landmass. Currently, Bauchi that remit 5.3 is collecting how much? 55.6 billion. Now, I know you will have argued, those of you from Bauchi here in this person, no wonder we don't like the bill. It's small. But this is why what makes my assumption here wrong, or the data wrong, is because we are using the same derivation. Now, if the new model of consumption is applied, Bauchi is likely to collect more. Do you know why? Because Bauchi has a population of 7.6 million. Now, assume 5 million of Bauchi citizens are using NTM, which is possible. There is an NTM network, etc. Even if it is 3 million, it means that money going to Lagos, part of it will not be going to Bauchi. And that is a lot of billions. Are we following? So Bauchi is likely to collect even more than 25 billion. So which means Kano, that has the second, in this part of the trade off, we have the 10 highest populated states. Why did I focus on highest populated states? Because it's a yardstick in the measurement allocation. Now, Kano is the second largest populated state in Nigeria, which means forget that they will get on population. Kano is likely to also get high on consumption. So I've presented some of this data to some of the decision maker using Hausa language actually. I think I'll share that with you so that because I was trying to explain that I'm not saying that there is no cost for Allah. I'll tell you the cost for Allah. How we are there. But however, it's not from what will be shared. I hope you get me. It's not the way it is being pronounced. So Kano, let's see Kano. What can't we just say? Kano has a population of almost 18 million. Lagos has 24 million. Followed by Rivers, followed by Kaduna, followed by Barnu, etc. These are highly populated states. So then class. Participants, I hope you can still hear me. Am I still there with you? Am I still there with you? If you are sleeping small, you are on your own. You are on your own. So make sure you are not sleeping. Make sure you are here. And those of you that are economists, I think we should start taking some accounting lectures so that you get more familiar with these data. Now look at region by region allocation. We took some time to generate dashboard on all the regions. Look at every item here. I won't have time. We'll be taking too much time. Let me quickly present the data. Based on region by region allocation, VAT allocation and generation, Southwest received the highest share. You can see the bar chart going up. Southwest received the highest share, 512 billion. Goes to Southwest. Of course, you know why? Because of Lagos. Let me show you what Lagos does. Let me go back to the video so that you see what is Lagos getting. Southwest, you know Southwest have been? Southwest received the highest. So currently, Southwest have always been the highest. Lagos with a small land mass of 3,577, all the rest now water, with population of 84 million, generated 429 billion funds. Remember that most of the industry in Nigeria, just like what Afis mentioned earlier, are remitted through Lagos. For example, Dangote is the second largest company that remits after MTA. And it pays its back to Lagos, not to Kano. I don't know how you see the problems. So only Dangote VAT and MTN VAT alone remitted through Lagos. Are you still surprised why Lagos have 429 billion? No. So I don't want you to speak like you are from the south or from the north or from the most. Speak as a professional, as Nigerians. So look at this data critically. So Southwest, followed by North Central. Can anyone guess why North Central is coming second as the region? North Central, the 6 states of North Central. We have North Central data here, Abuja, Plateau, Niger, Kwara, Kogi, Nasarawa. These are the North Central states. I mean, they are the second. So why is North Central getting the largest? Anyone can guess? Abuja, exactly. Now, let me take you to the time because of Abuja. What is Abuja generating? Let me show you. You know, we say Northwest, Southwest generated high because of Lagos. So these folks who are generating high because of Abuja. What is Abuja generating? Abuja, with a land mass of 7,350, bigger than Lagos, of course, generated 235 billion. Again, this data is for August 2021. Data available at the Nigeria Bureau of Statistics website. You can also get it in the FIS website. You can go to, I think Vanguard published it on that date. The link will be attached for you to see. So 235 billion, which means 235 billion Naira that were remitted to Abuja. Company like remit to Abuja and Lagos and other states. So they were not made in Abuja, but they were remitted through Abuja. Does that sound fair? And people in Abuja are complaining that why will people in Kano and people in Gombe be collecting more? I don't know how you get it. And we may be collecting more when we are the one remitting, but it's not about remittance. The time allocated committee went at where consumption will be the major aspect. And that is what we are trying to achieve. Now, Northeast and Southeast have the lowest part under the current system. But will it change? Will that change if we change the model? Well, it's likely to change. It's likely to change because population will drive it, no longer allocation. My participants, I won't go too deep into this dashboard. I believe you have gotten the message that the dashboard wanted to pass through. Can you indicate there? Let me know you've gotten the message. In case you are not aware, I'm checking to see those who are actually active. That's okay. Yes, I'm seeing Farouk. I'm seeing indication, but I can't see clearly. I really need eye doctor. I can't see this thing clearly. Okay, I'm seeing response. Response coming in from most of you are not sleeping. Well done. Well done for staying awake. Now let's talk about the problems. Let's talk about the problems, comparative problems. The first one, you can read it in detail. I'll just overview it. Administrative capacity. Administrative capacity. We are talking about robust framework for implementation, monitoring, and enforcement. The FRS is doing their best, but we all know they have human capacity, not enough. In fact, they have been that recruitment you see ongoing is in order to increase the number. They can't be everywhere. So administrative capacity has been one of the major challenges. This administrative capacity also includes infrastructure like technology, data collection, data-driven tax system. And I think that is what even the reform wanted to push. What did we have it? Now we're talking about a population of 438 million. Do you know how we know we're 200 million? You remember some years ago in 2016 when Buhari traveled to Germany? In one of the interviews, all before then, before 2016, we were thinking we're 150 million. Those of us working with data, our data was also actually 150, 150. In one of the meetings, after taking coffee, Buhari said we are 215 million. We were surprised. Everybody was surprised. So, of course, you will not speak without data. Because the data available was the population census of 2006 or so. So, which means we have data problem. And this data is the new reform, FRS will need this data. Nigeria Revenue Service proposed we need this data so that they can be able to make a well-informed decision. So we have administrative capacity in terms of labor, how we are again missionary, talking about technology. Then the problem of informal economy. Over 50% of Nigeria GDP is coming from informal sectors. These informal sectors, please, it will also be a wrong notion to say they don't pay tax. Mr. Feli have clarified that already. The different type of tax that you cannot count. Just if you want to test it, just carry pure water or bottled water and keep it outside. You see different levy. Local government, state government will bring different. They will collect 100 naira. You should collect 100. I think we're going to one market. At the gate, they collect 200. I was wondering what type of VAT is this 200? Or what type of tax is this? The issue of informal sector. How do we capture revenue coming from unregistered business? If you say we must focus, there is penalty involved. We are looking forward to get that schedule of all the penalties. So penalties now involved for you paying any company that is unregistered. But that is also we create another problem. Is our registration process now seamless? Because the last time I registered my business through CAC, I didn't get it easy. So much of it, because sometimes the website for even register, and at the end you have to get somebody to facilitate it for you. So the informal economy must find a way to capture them. Are we together? Then the next taxpayer compliance. Taxpayer compliance. Most Nigerians don't pay tax, and they have genuine reason for not paying tax. They say one of their reasons is that they don't see what the tax is used. Exactly. I've done so many trainings. In fact, I was training even FIRS staff. They asked me the same question. I should be asking them, I mean, they asked me, and I said, okay, they said, since you are the consultant and you are asking, I will also answer it. Tell us, how do we answer this question? I said, which question? That the tax people are paying, it is not getting to the people. I said, the statement is not true. Participant, it is not true. Your tax is getting back to you. How do you think the government is financing the budget? How do you think? I was thinking we have enough. Actually prepared a slide to discuss the proposed budget. How do you think the government is financing the budget? How do you think? Do you think it's miracle? If the government borrow 5 trillion, the budget is more than 5 trillion. The extra money is coming from, and each kobo from your tax is being financed through the budget. You can say maybe it's diverted along the way. That's another argument. I don't know how you get it, but you cannot say it is not used for the work. Look at some of the infrastructure you have. Some of this in Nigeria has not done anything. I say it's not true. Are you not driving through some of the roads in Abuja? Did they just fall from heaven? I don't know how you get it. You could say they should have done more. Of course, we have the capacity to be Dubai, I mean, but for now, so in order to achieve that, I'm not saying that because government wants to develop, they should be increasing only tax. No, but tax is being utilized in the budget execution. It is being utilized in so many aspects. But in order to enhance transparency, I think there is a need. What I will have pushed is the need for a particular task to be linked to a particular project. Project-driven tasks. For example, we have the TED fund. I mean, everybody says TED fund is working because they are seeing what is working, but nobody is telling you VAT is working because we are not seeing what the state governors are doing with the VAT. So instead of the VAT just going to the state government, it can still go to the state, but it should be linked to a particular project linking VAT, and that will encourage people to say, oh, that one we paid last year was this to build this school or this road. So that is the issue. It may enhance compliance. Then the next, I gave an example of each of the problem: corruption and leakages. High level of corruption and revenue leakages undermine the effectiveness of the reform. Revenue leakages. Okay, I was told that my time is up, so let me quickly move. Socioeconomic inequality. High rate of certain goods and services. Some goods and services are highly taxed while others are not. Regional disparity. So whether you like it or not, some region in Nigeria are located where their location gives them strategic advantage. How we are to give strategic advantage to generate more than some other region in Nigeria, whether they like it. We are not arguing that those regions don't have the capacity to generate more. For example, look at the southeast, for example, the location of the southeast. There is no they are not into any water according to the geographical landmarks. I mean, any major river or any major ocean or any linkage to ship. So although they are generating value through other means, but which means that any region that is located close to sea will have a more opportunity to generate more. I mean, then okay, regional disparity again. Let me take you to the north, the northern region. The northern region is relying more than 70% of their income is from agricultural produce. Do we agree? Now, VAT is exempted on agricultural produce. Have you not seen the problem with it? Which means they should be bringing the highest VAT return is exempted. So regional disparity. So government need to find a way to do that. I think federal government have kept 5% aside. That's why federal government is only 10% instead of 15%. That 5% is to reward state that is not getting enough. Are we together? Then dependency on oil. Those of you in the public sector, there's something called monoculture. Nigeria is a monocultural economy, which means Nigeria relies solely on what? On oil revenue. For those people changing now anyway, and that is a big problem. That is a big problem to the VAT implementation. Infrastructural deficit. the VAT reform will require a lot of infrastructural support of business, a lot of the active software for business to capture clean record of their consumption. It will also require good roads, electricity for the Nigeria Revenue Service Officer, that's the FRS, former known as Nigeria Revenue Service, to locate company and discipline. And this is also a big issue in the future. Now, what is our recommendation? Of course, there is a need to strengthen administrative system. There is a need to empower the Nigerian. The proposal to bring the ombudsman is a good proposal. In fact, it's one of the administrative strengths that will be applied. Then public engagement. We are doing this, we are not sponsored by the federal government. All the facilitators just are doing this based on their own will to contribute to the society. There is a need for awareness like this. When you watch it, some of them, they are the TV. The TV one is not too politicized. Now, I would like most of my participants to compare what you get from this training, from all the TV record that you've been watching. You see, there's a clear difference. It's too politicized. Someone will not be speaking on the technicality, focus more on the political and politics angle. Someone say, no, I'm not supporting the party system because I didn't even read it. You see the problem. So there is a need to go out of that. Let's support from the informal sector, regional equality, EPT, and develop mechanism to balance VAT allocation, ensuring less developed regions receive adequate support. Some regions require adequate support, like areas that are even by terrorists and bandits. You can say, no, it's their own problem. No, it is our problem. It's affecting the collection. How we are there. So it is, we need to. And then anti-corruption measure, there is this, the proposal is also that once money comes into your account, if EFCC, for example, is pursuing someone for fighting someone on 60 million, FRS will first of all remove VAT from it. How we are living. You can obviously cannot follow the rest. Are we together? So it's a way of, but this needs to be applied holistically without making an opinion of it. The last issue I wanted to bring in here before I leave is, please, I will really advise the committee to look into the increasing incremental rate of the VAT. I think that should be on a bit because it's a fiscal policy. Once you increase VAT rate to 10% to 12%, it will also affect the price of goods and services. And inflation rate is already very high currently. So that impact, that direct effect on the economy is something that we need to minimize. We have already floated the naira, and already the exchange rate is dealing with them. If it's importation is becoming too difficult, we'll focus on Nigerian goods and services. So we need the prices of these foodstuff and etc. to crash down. I know there is an argument that it is not going to affect basic amenities. No, that's it will affect some items. How many items are in the exemption threshold or zero rated threshold? So I will really advise the committee and I will also advise the National Assembly to, if the bill will be passed into law, the rate should not be passed. However, it should be amended. It should remain 7.5%. Remember when Buhari increased it to 7.5% to 7.5%? We complained that it will affect, and people know it did affect. It's just like fuel price. When the fuel price go up, transportation will definitely come in, isn't it? And then we hope that this is a physical. So overall, this policy is a very good policy, but requires some bit of amendment. Reducing of CIT is very good. Even taking it below even 25% if you propose, because comparatively to some countries in the UK, for example, CIT is 19%. Although it will be argued that that is a very developed country, but I will still beg the National Assembly, anyone watching this that has power to make decision, should consider the fact that VAT rate should not go up. Then the rent allowance, the rent relief of 400,000 is too small under the PDE. My recommendation is the rent relief should go up. Consolidated relief become higher. I hope we are clear. Because the rent of 200, who is paying rent of 200 now? I don't talk, maybe I understand it's not focused only on Charlie, it's also focused on all over the country. But trust me, the inflation is 23 point something percent, and then the rent relief, if National Assembly should look at the fact to increase the rent, 800,000 for payee as minimum is very little. That means on monthly basis, individual who earn 67,500 will not pay. That's very good and encouraging. People have been asking whether they should increase it. I will not advise National Assembly to increase it because of this local government will suffer in collection of pay if the minimum payment goes above 800,000. So they should maintain 800. That's my own personal opinion. But rent relief should increase. Rent relief should increase. We don't have enough houses for Nigeria. So at least we should encourage them to have their own house. I will also advise the National Assembly to look at how rent income tax will also, income earner will also enjoy what we call rent a room relief. Rent a room relief is a relief given to individuals who rent a room in their personal, in their own house. So I have 3 or 4 bedroom flat. I decided to rent for 1 room or 2 room. A relief should be given to me to encourage people who live in 3 bedroom, 4 bedroom with 1 wife and 1 kid, wasting the remaining 2 rooms to rent it out and get a relief. So RAT will be introduced, will be added. This will really help under the property rental act. Thank you very much, participants. I hope we're able to do justice for that part.
Thank you very much. Please, everybody, let's give a round of applause for Mr. Idris. He has done a lot of justice to some of these things, and I believe a lot of us have gotten a lot of insights today in respect to tax matters. Now, we will be going into questions right away because of the time factor. And please, for everybody that has a question, just put your raised hand notification on, and we'll be calling names individually. So once you call your name, you will on your mic ask your question, and then the respective facilitator will answer the question. Is that okay? Mr. Ima Innocent, you have been raising your hand since. Let's start from you, Mr. Ima Innocent. Can you unmute yourself? And let's hear your question.
Thank you. Good afternoon. I don't know if you can hear me.
Yes, we can hear you. Go ahead.
Yeah, I really appreciate the forum and also the insights into the tax and the VAT system in Nigeria. My name is Alaba Innocent, and by the grace of God, a chartered accountant. I just want to bring it to your attention concerning the, first and foremost, let me comment on the forum. One webinar like this have been raised. If you try and make it a more interactive, where when a presenter makes presentation, it's easier for people to ask their question immediately, then the presenter can scribble something down before its final remark. It makes it more interactive and people will follow up. Because when we started, we were like 60 or 70, and as we're speaking now, we are like 40 left. Because people that have questions, we only given the privilege to do so, and the left. That is just by the roadside. Now, the first question I have about 4 or 5 questions. The first question I have is the abolition of FIRS, changing the name or changing the government, changing the act that established them. Hello, can you hear me?
Yeah, with you. Go ahead.
Yeah.
So the question.
I'm not being political, neither am I being tribalistic, but I want to just ask a simple question, which on that, my major question is this: who oversees the affairs of the probably the new agency that is being created. We all know what happened in Lagos, where Alpha Beta was placed in charge to collect the revenue of a state and share it with the state because they felt it would lead to effective collection and efficient, blah, blah, blah. They just gave it the English. And we all know what happens to Alpha Beta. It's a one-man business that oversees the income of an entire state, which is a very wrong system. Like in the UK system, we have His Majesty Revenue Collection that collects revenue for the government. They are not answerable to the Prime Minister of UK. They are answerable to the House of Commons. Okay, now, are we not heading towards a regime where, like something like EFCC, that are answerable to the people that created them or the people that proposed their bill for their creation? Is that not where we are heading to? Now, concerning the payee, where minimum wage is being exempted from tax, yes, in all countries of the world, minimum wages are being exempted. Even in the UK, everybody shouts the tax system is killing, the tax system is this. I can practically tell you that in the UK, the tax system, especially the payee system, is so transparent that they only make it high on the outside to discourage people from doing multiple jobs. Now, when it comes to the payee system in the UK, you discover that for every household,
Mr. Emmanuel,
yeah,
hold
I'm
on.
getting to the question.
Can you quickly come up with your question, because you are giving us your opinion, not your question. So just help us with the question, then we can now discuss. Yeah.
The 2.2 million payee that will be paid 15%. Can you hear me? Don't you think that rate is too high for just 2.2 million? Looking at the inflation rate in Nigeria currently, then the consumption tax he talked about, where VAT is taxed on consumption of goods and services. We all know what happened in the tax in the government in general. It's just a way of, let's say, cutting off some parts. Don't you think if this consumption tax is to be effective, don't you think some states will be left out of the revenue confirm, not fully where Nigeria is a very lazy country? That is another part. Then the last part I would still also want to say is on the VAT increment. Don't forget, when VAT is increased, burden are transferred to the consumers. Now, if this government really truly they said the tax act is for the low income earners, have you thought of the impact it will have on this lower income earner? Because basically, most of all these tax we are just discussing still end up to the fact that it is the lowest income earner or the less income earner that end up paying them. By doing this, you increase their income, you increase everything, you take the money away from them from the other side. I think I need probably more clarification on those facts. Thank you.
Okay, thank you very much, Emmanuel. I think let's take Emmanuel's question before we move ahead, right? So, Mr. Philip, can you take parts of Emmanuel's question while Mr. Idris will take, I think, the other aspect in respect to consumption?
Sorry, can I speak and you'll hear from there?
Yes.
Okay,
Yes.
thank you very much. Okay, so the main change, that's what I'm responding to. So there is nothing in the act that empowers any consultant to be able to assess, collect, and account for tax. And this provision has always been in the Establishment Act, FIRS, and it is still retained in the current act. What the act says is that the service can employ anybody as consultants, as long as they are not being employed for the collection, assessment, and accounting for tax. So what it means is that no consultant will be empowered to assess, collect, and account for tax, as it has always been. Okay? If they do that, it will be an aberration. It will not be supported by law. That is the first thing I want to say. Secondly, there is a procedure for appointing the executive chairman. The executive chairman will be nominated by the president. His appointment must be confirmed by the Senate. That's in first class. There is going to also be a board. And in that board, members of the board will be drawn from the 6 geopolitical region, which will be called non-institutional members. And institutional members will be drawn from the Ministry of Finance, the Attorney General of the Federation's Office, Nigerian Revenue Fiscal Responsibility, RAMFAC, okay, customs, and some selected agencies of government. So with this kind of framework, I don't see how his fear, how that fear will exist. That fear does not exist at the federal level. Okay. And another thing I need to tell you is that even at the state level, if you look at the Nigerian Administration Act, it has established the State Internal Revenue Service to be an autonomous organization, just like it will be set up at the federal level too. So it will be an autonomous organization, and the process of appointing the executive chairman for this state have also been made autonomous, in that the recommendation will come from the president. The State Board of Internal Revenue would have to confirm those appointments. So I want to say with all confidence that that fear should be allayed. It will not exist. It will not exist. And if it now happens, because you know how Nigerians are now, we can use our powers to ignore what the provisions of the law are. It will be challenged in court. There was a time in the history of FRX where they wanted to use consultants to do audit. A lot of taxpayers went to court to challenge it and saying that your act says that you can't use consultants to do this work. This is an assessment collection and all of that. You can't do that. And a lot of taxpayers did not even permit that, and nothing happens to them. So this country is too big for us to suffer that kind of thing.
Okay, yes. Besides this, can you just briefly talk about you mentioned something about the 7.5% the increase in VAT. I think yes.
I think that was the same fear that Mr.
Idris also addressed.
I think that there should be a delayed projection.
Yes.
It should not be the next year. It's the next year.
Well, he said something in the comment section that if the president is the one hiring, that means he can also fire. I think, in my own opinion, definitely the president will always be the one to appoint. It's just like the way the ministers are appointed. He will definitely select somebody, and then the person will go through the National Assembly procedures. Then they select the person at the end of the day. So I don't think it will be easy. So I don't think it will be easy for him to just fire, except you have maybe have gross misconduct and other issues aligning on you. Then you would have to be going. You have to go. Yeah. So you don't just fire someone like that in the I think public sector. It's not easy. Okay, let's move on to the next person. John Yunana. John Yunana. Can you unmute yourself and ask your question, John? Okay, John is not answering. Let's go to Mr. Mohammed Ibrahim. Mr. Mohammed Ibrahim, can you unmute yourself and ask your question?
Okay. Hello, you all.
Yeah, good afternoon.
Yeah, awesome presentation. We really appreciate your insight effort. Thank you so much. From number one to all numbers. Okay, please, my question is, as Nigeria, the system we have, the existing system we have of tax collection might not be accurate and the system might not be fully functioning. So my concern is, if like telecommunication that you made mention that I don't know how they work or how they remit their VAT because it's consumption. Maybe for instance, you register your line in Kano, means you're going to be paying your VAT based on the state that you registered it. So you see, if you travel to Abuja, for instance, and you purchase a card in Abuja, then that card that you purchase in Abuja and the line that you registered in Kano, so where will it be charged based on VAT? And again, is it going to be charged based on the state of production, or I don't know if it's being produced in a state or it's being produced in one unique state? Then secondly, as we are all aware, based on this policy that Tinubu is bringing, is there any country in the whole world that are applying the same method of, maybe because you are generating more revenue by a state means you'll be collecting more based on your contribution, and other like 13% derivatives for oil producing states? So is there any state that are using such, or is it because Nigeria of multicultural and based on multi-religion and many reasons, only Nigeria is applying such? So please, because maybe you've done some research, maybe you have facts regarding that. Then thirdly, Mr. Philip, we all know him. He works with FIRS. So in your comments, please be objective, not subjective. By saying that you have power or FIRS have any power to control, to say that a consultant cannot help FIRS to collect tax, or somebody cannot influence tax collection in Nigeria, I don't think it's right. Because Nigeria that we know, either Tinubu or previous administration, one can just come up today and bring a policy that suits him because he wants to make you take advantage of it. So, and again, even when you want to stop him, they will arrest you or they will bring something that will haunt you. Because virtually most of the people that work or most of the people that have positions are one way or the other found wanting. Because if they want to open your file, they might find something in it, even if you are a change person, unless if you are supported by those cabals. So, like what the other person said, Emmanuel, I stand with him. The same way Tinubu is running Lagos with his own tax company, collecting tax, manipulating the state, he can change a governor today, like the same way he did for Ambody, that he brought Sanolu. He can do the same thing.
Okay. I think you have exhausted your time for the question because you've made your point in the question.
No. I'm regarding the last. I'm only making a point regarding Emmanuel. I'm not making a point regarding my own questions.
But you've asked your questions, right? So that we can.
Yes, I've done that. But this is a conversation for us to learn, even if you have taught us. So you can also tap from us.
I understand.
Because we are all, yes. So, but
you're not the only one online.
No, I agree with you. But you would have told me I have 5 minutes or 2 minutes or 1 minute. Then I will stick within it. You never said that, Oga.
Okay,
sorry. So let me conclude, please. Just a minute. So you understand, it's a system that we all know the people that are ruling us, and we want the best for Nigeria, all of us. It's not that we don't want the best. I want Tinubu's administration to succeed. If this tax act is going to make Nigeria succeed, I want it. If it's not going to make Nigeria succeed, I don't want it. I'm only after the success of Nigeria because it's going to affect me directly, affect my people directly, affect everybody directly. We're in a system like people mentioned of UK. I'm in UK right now. I'm being paid weekly, huge money, but sometimes they don't tax me because I'm a student. They don't tax me. So thank you very much.
Okay, thank you for your point, Mohammed. We'll take note of that. Let Mr. Idris and Mr. Philip answer your question.
First of all, I would think that Mohammed, you are not being fair when you say, I mean, you have not even been in the country in a while, so you cannot even make those transactions.
Okay, I do come to Nigeria 3 months. I'm in Nigeria always.
Yes, Mohammed, please allow me to respond. One of the things we try to avoid is to make it a political argument. We wanted to make it based on facts. Data. Yes, and data. And the facts on the ground says that you cannot use consultants to collect tax. That is the fact on the ground. That is what the law. What Tinubu would do is a different matter. And I said, even if he chooses to do that, it can be challenged in courts. I told you also that there was a situation where they wanted to disregard what was in the law to use. It happened in Nigeria. A lot of consultants on this call would agree that they did not permit those audits. Yes, and nothing happened. So let's not be too emotional sometimes. I know that there's a trust issue. There's a trust issue. We don't trust our government. So even when we say a good thing, we want to, fight it because we don't know. I think let's give there are some things that we need to give chances to survive. The second question he asked, which was probably on VAT.
He asked, are they doing something similar in other?
Yes, yes. Sir, the UK where you are, that is what is done in UK. I can tell you so far. In United States, where we have 54 states in United States, that is exactly how it is done. In fact, I can tell you that I have tracked the conversations from this batch chat from the beginning to today. I can tell you that what is being done now is what most developed countries are doing. Okay, where VAT is, taxes generally. That was what we were doing even before the Second Republic. You remember the First Republic, the 1966 Republic? That was what we were doing, where collection is done at the regional levels and contributions are made into the center. What we are doing now is the anomaly. And there's no developed country that is not looking at approaches towards encouraging consumption. Now, you talk about buying your VAT registration in Kano, you bought a car in Lagos. What we are saying is that VAT is a consumption tax. It has nothing to do with where you report it. It should have everything to do with where it was consumed. So where did you consume that purchase? In Lagos, where you bought the car. So it is at that point that VAT will be tracked. That is what we are telling, what they are telling finance managers to say, look, wherever you sell this product last, that is the point of consumption. Wherever it is sold last, that will be the consumption. So let us not mistake consumption with reporting.
Thank you, Mr. Philip. Thank you, Mr. Philip. Sorry to come in. I didn't mean about purchase, and I meant about consumption. Sorry, please. My question is not answered.
You don't need to hold on, Mohammed. Please, let's form a decorum here. We are answering questions. Is it okay if your question has not been clearly answered? You can always continue this conversation later, right? But let's give room for other people. Let's give room for other people to also, make their point. I think it makes sense that way. Thank you very much. Okay.
Okay. Sorry, sir. I am John. I was trying to unmute my mic, so I was having issue with it. Yes.
Okay. Go ahead, John, please.
Okay. Thank you, sir, for the opportunity. Good afternoon, sir.
Good afternoon.
I want to have a clarification on the issue of the minimum wage. If we are saying that the new proposed bill that will be coming is exempting 800,000, so my question is, the minimum wage, people that are collecting minimum wage, are they 100% exempted completely? That's one. But if we are giving them a relief of 800,000, that means that now by 70,000 times 12 is going to give me 840. So if I'm giving them relief of 800, does that mean that now I'm going to tax the 40,000 that remains? If I'm taxing the 40,000 that remains, on how many percentage that I'm going to tax it? That's my question. Thank you.
Okay, yeah, Mr. Philip will take that.
Okay, so these are the kind of things they call lacunas in the tax space. Okay, they are called lacunas in law. on one area. First of all, I want you to understand that the law, no matter how you write the law, no matter how you propose to do it, there will be something that is missed. There's something that will be omitted. There will be something that was not addressed. Okay, they are called lacunas in law. On one hand, you are telling us that minimum wages would be tax exempt, right? Based on, and it's going to be based on the Minimum Wage Act, right? And on the other hand, you are telling us that 800,000 will be taxed at 0%. Okay, so they are called lacunas. And what normally happens when we have lacunas in law is that there is a circular that will address, these lacunas. Don't forget, when they were proposing these bills, they had not signed the minimum wage to law. So the minimum wage at that time was 30,000 per month, which is 600,000. And I think it was based on that understanding that the committee members proposed 800,000. Okay. By the time minimum wage was, in fact, I hope you know that they've never implemented minimum wage yet. By the time Minimum Wage Act was eventually signed, this bill was already ready and transmitted to the National Assembly. So those are those lacunas. I don't think we should worry about it now. Allow it to rest.
And just to interject, I think from the calculation, if you have 840 and you remove 200,000 for rent allowance, it means you're already at 600 and something, which means you are still within the 0%, which means you still not be subject to any form of tax. So so even if you are even above the minimum wage, so a certain extent, you might still not be paying that tax, because that rental, let's assume you are earning probably like 800,000, and the rental, you're earning like 1 million naira, and the rental is 200. It means you fall within that 800 bracket, which means you still not be paying tax. I think that maybe also helps in that way. Okay, yes. The next person that wants to ask a question.
Hello? Hello, can I ask?
Okay, go ahead, please, since you are the only one there.
Yes, my question earlier was about data tracking. I understand what VAT is meant, is a consumption tax. What I meant was, if you have a line like, let's say, a mobile phone with a SIM card, you registered in Kano, and you come to Abuja and purchase a recharge card. So, and that recharge card and your line is registered in Kano, I don't know where would the tax, the VAT be what they call remitted to. And again, if the state of that card that is being produced, maybe let's say for instance is in Lagos, but it was brought to Abuja to sell in Abuja, how would they track the data? Like, that was what I asked.
Okay, I think first of all, let me just mention here. I think the first thing first is that nowadays you hardly buy recharge card from paper, whereby you buy from maybe an aboki guy on the street or something. You mostly buy from your banking app. Is it okay? So I think now the usage, it will be difficult. The usage in terms of you now will be a different thing. It has to do with the person receiving your money. So whoever is the end-to-end person receiving that money from your banking app, is it okay, will determine, I think, the point where the payments of the VAT will be made. Not you, where you are using your own recharge card from. Because I think I can as well. Okay, Mr. Hafiz wants to add to this. Hafiz, go ahead. Please, Mr. Hafiz, go ahead. We can't hear you.
So while Hafiz is trying to come up,
so
these are narrow specifics. These are teaching problems, don't be resolved. I used to work with Nitel, and that was my first career. There's what they call collocation. Collocation is a general word, but it's actually a telecoms word that says that they can track where a call or where a call is made from. Okay, so what do you think? If I recharge my phone 5,000 today, I am in Abuja and I spend 3,000, and tomorrow I go to Okene, my state of origin, I use the remaining 2,000. MTN can tell. That is consumption. So I don't know what they will do. I'm not the expert here, but I can tell you that consumption with respect to MTN can be tracked. You understand? And this data is available in the telecom industry. What the consumption of telephoning is public available data. It's publicly available data. Your consumption, and that is what because if I'm calling an MTN line with my Globe must settle me for that call. That's how it is done. That is how they do that settlement. So since we are talking on specifics now, and I happen to know this, it's called interconnectivity, collocation. Okay, these things can be dealt with. I don't want us to worry over these teaching problems. The second thing you talked about, your purchase of car, and I'm saying, where did you finally pay for that car? It's consumption. Yes. So I don't want us to overheat these things. They are not very serious things that we should lose sleep over. Yes.
Okay, let's quickly hear from Mr. Hafiz. Can you unmute yourself now? We are still not hearing you, Mr. Hafiz. No, I think we should be more focused. Okay. Nuhu David, can you unmute yourself?
Yes, good afternoon.
Yeah, good afternoon.
Yes, I just want to add a voice to this recharge card and consumption issue. I currently work for Globacom. I've been there for a couple of years now, and it is very, very, very trackable. Like the last speaker said, it is very trackable. If you purchase a recharge card of 100 naira, right? I can track and tell you the dealer stock you bought, pan Nigeria now. I can tell you where you recharged it. I can tell you where you made your respective calls till you exhaust that 100 naira voucher recharge card. So data is very much available to track and provide information as to this regard. So I think the respective authorities just need to collaborate with the telcos, MTN, Glo, Airtel, and the likes, to be able to have a tab on these informations. And I tell you, if they do that, everything can be tracked without any error. Thank you.
Okay, thank you very much, Mr.
Hello.
Yeah,
hello, can you hear me?
Okay,
thank you. Okay, thank you. I think the last two people who just responded have actually said what I wanted to say. To answer the man's question as regard consumption, it's just about integration. The reality is that most of all these devices that we use today, they already have their back end. It's just like you have a money in a bank account and you are using ATM. If you use ATM in 10 places, if the bank go back to their back end, they can actually track the locations of where you have actually withdrawn those money from. So the same thing also applies to telecoms. I'm not a telecom expert, but I know Mr. Fitz have said something about coloration, which also align with my thought too as well. So some level of integration is going to happen. And it's just that another thing again, that once this bill is finally passed, a lot of integration will commence amongst most companies, because the consumption aspect of this bill is critical for us to be able to drive our success. So I don't think that is really an issue at all for me. I don't think it's really an issue at all for me. And on the aspect of consultant that the other man was talking about, it has been said at the beginning of this presentation that we really need to remove politics and ethnicity from this discussion. If we try to bring politics and ethnicity into it, we may not be objective in some of our submissions. I would like to have responded, but if I respond, it will look as if maybe I'm being political. The bill is nearly clear. If today the bill is being passed, it becomes an act, and they now go against what is being stated in the bill, Nigerians have a right to go to the court. That is just it. And that answers it all. Thank you.
Thank you very much, Mr. Hafiz, for your contribution. Just to bring it up, Mr. Mohammed Ibrahim, you did mention that the word Abuki is a derogatory word. Apologies if you take it offensive, but I only just mention it from a perspective of not being offensive. Is it okay? Because on a good day, I speak outside with these people and we can call ourselves Aboki and we don't see it as it means friend. Yeah, so like my guy, something like that. So I don't see it from a point of insult. So if you take it from that angle, apologies to that. Ensure, please, can you unmute yourself and ask your question?
Okay. Happy New Year, sirs. Thank you so
Year.
much for the job well done. Honestly, I really appreciate it. Please, I want to ask just 2 questions because I joined a bit late. For the VAT of 10%, I heard Mr. Idris saying that the VAT of 10% to be implemented 2025. So I want to know if the bill has been passed to law, and is it going to start this January 2025? That's my first question. My second question now is for the PAYE proposed table that was posted to the group of the first class of 800 and so on. Has it been passed to law to, or when is it going to be implemented? Thank you so much, sir.
Okay, Mr. Idris, can you answer that?
Yes, okay. Therefore, thank you for the question. The bill has not been passed into law. I think that's why it's still called a bill. If it is passed, it will not be called an act of legislation. So the calculation of VAT and PAYE still remains the same, based on 7.5%. But once the bill is passed into law, it will become effective. I think the usually effective period to be stated. Most time, sometimes it could be immediately, sometimes grace period of 90 days.
Okay, thank you very much for that, Mr. Idris. So any other person that also asks a question, please can you highlight so that you can ask your question? Any other interested party that wants to ask question? Okay, so let's just use this opportunity to give the speakers to make their final thoughts on the discussions we've had so far before we close for today. So, Mr. Philip, you have the floor.
Thank you very much. I think there is no perfect bill, no matter how we try. But our tax laws as they stand are very old. They're very archaic, very outdated, and they will not achieve economic development. You know, tax laws are fiscal policy tools. They're like Idris said, they're not monetary policy tools, they're fiscal policy tools. The first objective is to raise revenue for government, but that's not the only objective. Okay, so let's give this a chance. Okay, we can't continue to do the same thing and expect a different result. They used to say that you can fall off the ladder by accident, but you can't climb up the ladder by accident. You must be deliberate in attempting to climb up the ladder. And the last thing I want to say is that this is a general fiscal reform initiative. It is not just a tax reform initiative. The implication of that for us is that this tax aspect is just a part of a whole general. There's going to be governance reforms, okay? The way government do things, there's going to be reforms around governance, there's going to be reforms about general fiscal outlook. Tax is just a hanging fruit, so you can easily just do it. Some of these reforms, based on the mandate of the committee, is supposed to impact even on the provisions of our constitution. So let's I know there's a lot of cross issues with government, but we need to move forward. And I think this is one good way that we can attempt to move forward, you know, is by embracing and thank God we have our representatives at the National Assembly. So it's a good time to send input quickly to them in any part of the tax bill that you don't like. Okay, it's not about arguing it on social media. Yes, our National Assembly people are looking at it. It's a good time to send inputs to them. Thank you very much.
Okay, thank you very much. Mr. Hafiz, we would like to hear one or two from you as well.
Okay, thank you very much. And what I would like to say is that we are one Nigeria. So let's just support the current government, and let's put politics aside. Let's put ethnicity aside. It's just about something that's going to make impact on every one of us. So at every space that all of us are, let us preach something good about the country. We should not be negative, because we don't have any other country. This is the only country that all of us will all have. So let's be positive about everything that have been put forward to us. And thank you for the school for organizing this kind of knowledge sharing section. Thank you.
Okay, thank you, Mr. Afis. Mr. David, are you still around? Mr. David, are you still there? Probably he's not there. Mr. Idris, can you give us one or two before we go?
Okay, thank you very much for the opportunity. And every one of you that coming for the program, we appreciate you. Like I mentioned at the beginning of my discussion, please try to be professionals. Those of you that are professionals here, don't allow bias. There are some statements here that they are not based on facts. For example, now someone mentioned the issue of alcoholic consumption. That some states who say they don't want to consume alcohol, they are sharing that. Alcoholic consumption does not generate anything. So you cannot now blame Calvo for refusing to drink alcohol. Now, why are they collecting 25 billion? How much does it, in fact, it is even different. And generally, if you look at the data and statistics, what drinks, general drinks, Coca-Cola, Fanta, you know, they not consume a lot of sugar. So because if you say, no, we consume more alcohol in our own part, and these people don't consume alcohol, what about the other ones? What are the big drinks, which is all combined? And it's less than 2%, not 3%. So please discuss with facts. Don't allow the market emotion, women emotion. Talk about it. And another information I would like to share with you, in order to conclude, is that Nigeria proposed 49.7 trillion naira budget for next year. Which
For this year.
For this year. This year, it has not been passed into law. Then the total expenditure for the budget is 34.82 trillion expected to be generated as revenue. However, there is a budget deficit of 13 trillion 800 billion. Where will that money come from? Where will the government get the money? Which means the government have to borrow, take loans. And how long will it be borrowing? There is a need to generate money from other sources. With this tax reform, there will be an opportunity to generate more money because more companies, higher income earners will pay more VAT. Especially politicians, someone is a billionaire in need. And if you check the amount of income tax is paying, it's less than 20 million. So a Nigerian man that spends billion, or in fact, will tell you that I'm the richest man in the world, but he's not remitting more than 20 million naira here in Nigeria. So it means there is a question mark. With the implementation of the reform, government will be able to get more income. And then the reform also is not meant to affect any region, but there are areas of the reform that are really required to be amended before they are passed into law. Mr. Philip has made a comment. He said, no bill is perfect, and it is true. Even if this bill is passed today, discovered there is something abnormal, we can quickly send in an amendment and it could be amended. But I think we should cooperate and allow this bill to pass. Our tax system is outdated. Those of you that are ACCA members here, I'm ACCA member, and I can assure you that ACCA don't take Nigeria tax. Have you asked why? I teach tax, I teach UK tax, Ghana tax, I've taught so many other country tax at ACCA level, but no Nigerian tax. And it is not recent for it. See, I don't think even since the same section I have been taking Nigeria. They say because it's not changed. I don't know how you get it. That is not changed. So what are you, how do you set a question in tax if the law remains the same? Are you getting it? The reason why you get that study is because every year there is a financial change in regulation. So that mutation is important, and let us cooperate. But there is nothing wrong for commenting on area that have a bit of complexity, we need simplicity in taxation, or that have a conflict. to our interest. You can comment on that, but in general, this bill is a wonderful bill, and all the speakers have touched each aspect of it. We may create more time to look at some other aspects. We didn't talk more like petroleum profit tax and some other aspects like look at other levies that we didn't talk about. And thank you everyone for coming. We really appreciate it.
Okay, thank you very much. I have Mr. Umar hands up. Let's quickly take your question before we wrap up.
Yes, sir. Good afternoon, all.
Good afternoon.
Happy New Year, sir.
Same to you.
I'm asking whether we can at least get the recording and especially this slides.
You will get all the links on our YouTube page. So just you will drop the YouTube link once we upload the video.
Okay, sir. Thank you. How about the slide?
You will get links on the YouTube page. Everything will be on the YouTube page. So once you just click on the comment the description section of the YouTube video, you will see all the links where you can download the slides and every other thing there.
Thank you, sir. Thank you, sir.
You're welcome. Okay, so thank you everyone for being part of this interesting conversation that we've had today in respect to Nigerian tax reform. I believe we've all learned one way or the other. The essence of this is not for us to actually see it as a form of argument, but just as a form of knowledge sharing. We will definitely be bringing up more of this type of trainings out maybe every quarter, and some cases, some months where we have things like this to discuss, we'll bring it up, especially when the what they call it, the budget, the Nigerian budget become passed. I think we will come back again to have a discussion on the budgets so that people also have an idea of what is happening in respect to the Nigerian budget. We will be doing a session on that sometimes later in the future. People like Mr. Idris, Mr. Philip, Mr. Hafiz, they will be bringing more insights on those kind of issues to us. And if there are any other, special issues that comes up in between, we would also be doing sessions on those kind of things. Apart from that, you could also check our YouTube page to get other videos, because we'll be dropping some weekly videos in respect to topical issues and finance, accounting, audits, tax, and so on. We'll be dropping that for you guys to watch and learn. Is it okay? So please subscribe to our YouTube and follow all our social media handles, because we'll be doing stuff like that. And we are thinking of creating some other programs on TikTok where you could join us live and we could interact on these type of issues. I think we'll be looking forward to Mohammed Ibrahim to give us more insights in his own opinion there. I think that will give opportunities for you to talk extensively on your opinion. Is that okay? It's a pleasure having everybody. Thank you once again, and you will get the link to the YouTube to the videos once they have been uploaded.
Before we round up, please, we need to remind you our lectures will be starting on Saturday.
Yes.
11th of January 2025. That means next weekend, Saturday.
Yes.
You have to register for the classes, make your payments, and then join the class. All the lecturers are ready and willing to assist you to pass the exam. Please inform others. We have shared our flyers, and the registration link is also attached here. Registration is compulsory. Then you make payment, and then you join the class. Inform others. We have tutors for all the papers, qualified tutors with high level of experience, and the pass rate also in our center has been very promising last night. You can ask around. We have been celebrating our students that qualified. Some of them are already here. Please inform others, encourage them to join, and we promise we'll put our best to support you. And we also encourage you to be determined to pass us. You join the center, you get the necessary support, and also even necessary materials that can push you ahead. We hope to see you in the class on Saturday. If you have more questions, our number will be displayed on the YouTube page, or you can take your pen to write it at 070-123-55557. 070-123-55557. It's a chat account. You can chat us up. We'll add you to the general group platform. I think Mr. Philly room can put a link, I mean.
Yes.
So please, WhatsApp link. You can just click
You
on
can
that
just click
link
on it and you
to
join the
join
group.
the general learning hub. The learning hub is a platform where we share information only relating to ICANN educational information and also employment opportunity. As you are well aware, we are audit and accounting consulting firm. So we perform audit job regularly, we do accounting consulting, and also do recruitment for other company corporate entities. So for those of you that are open for job opportunity, you can leave your CV with us. Any opportunity that comes up, we will inform you, be the first to know. We wish you all the best. We thank you for this time you put in here, and we hope you have learned one or two things. Go and share the good news. I always tell my students, don't tell me, tell others what we have done. It will help the promoters. The best way if you want to reward us is by telling others this is the good things that they have done. And also critically evaluate us. Tell us where you think we are weak, where you require us to improve. We want that sincere assessment so that we can put a measure in place to mitigate any weakness. Thank you everyone online. I noticed from the beginning we have more than 70, but right now dropping. I understand, and like Emmanuel mentioned, I don't think it's because of the engagement. You know, Nigeria, sometimes some people put small data to join in and data finish. It's understandable. I've been in that position, so I can evaluate it very well. So, which means you join in, or network will be an issue. You don't join in, have enough data, and then the network will be shaking and you will not be able to enjoy your participation very well. But the video will be available. Everyone is going to have access. So, bye-bye, everyone. See you in the next section.
Okay, have a wonderful day, everyone. Thank you for joining. I'll see you in another session. Wow.
Hello? Yeah.
Okay, 2013 ne? Ya fi. Me update ɗin sai ya duba mana annual return ɗin.
Hello, welcome to ATILC Business School, a professional training institution that provides both ICANN and ACCA tuitions to students taking the professional exams. At ATILC, we have conducive learning environments, qualified tutors that can help you pass your exams. We have tutors with years of training experience, and our tutors can guarantee you a pass in subject matter areas. Why not join us today and let's be part of your success story? ATILC, your mentor for life.